financial services, the developments of markets and regulatory approaches, efficient regulatory approaches, moderated by His Excellency Professor Mohammad Azmi Omar. The floor is yours, Your Excellency, please.
Bismillahirrahmanirrahim.
In the name of God.
Assalamualaikum
Bismillahirrahmanirrahim.
warahmatullahi wabarakatuh.
Assalamu alaikum wa rahmatullahi wa
Good
barakatuh.
morning to all of you. Before I begin the session, I would like to invite the speakers, panel members, and these are Mrs. Sharifatul Hanizah Said Ali from Securities Commission of Malaysia. Second speaker is Mr. Ijlal Alvi from the International Islamic Financial Market. And third is Mr. Shina Hakim Oliwale. Okay. From Marble Capital Limited. Please. Thank you. The fourth speaker, Mr. Iman Shah from OJK, the Financial Services Authority of Indonesia, will be joining us through online. And I see he's here already with us. Again, welcome, Mr. Iman Shah.
Thank you.
Thank you very much. Ladies and gentlemen, brothers and sisters, again, thank you for joining the first session this morning. So we are in session 4, which is the title, FinTech and Islamic Financial Services, Market Developments and Effective Regulatory Approaches. According to the Global Islamic FinTech Report 2021, the 2020 Islamic FinTech transaction volume within OIC countries, again, they surveyed only 64 OIC countries, in 2020 is estimated to be $49 billion. So which means that the global Islamic FinTech transaction volume is estimated to be $49 billion US dollars. This represents only 0.7% of the global fintech transaction volume. However, Islamic fintech are projected to grow to $128 billion by 2025 with a compounded annual growth rate of 21%. So again, a very high growth rate at 21%. This is in contrast to the conventional fintech growth rate, which is estimated to be only 15% during the same period. Saudi Arabia, UAE, Malaysia, and Indonesia are the largest with estimated transaction volume. These are also among the countries that have legal and regulatory environment for Islamic fintech. Fintech generally, if you look at the categories developed by the fintech report, there are 9 categories of fintech. One is alternative finance, second is capital markets, third is digital assets, and there was a discussion yesterday on digital assets, cryptocurrencies, Bitcoin, and so on. Fourth is payments, fifth is funds raising, sixth is deposits and lending, seventh, wealth management, eighth, insurance and takaful, and lastly, social finance, which means zakat, wakaf, and sadaqah. So those are the categories of Islamic fintech. Whilst we know that Islamic fintech has great potentials and opportunities for providing Islamic financial services, as well as increasing financial inclusions within the OIC countries. However, there are also implications as far as risk and financial stabilities are concerned. Hence, the importance of regulatory oversight for fintech development. These sessions this morning aims to look at 3 things. One is to discuss the market developments of Islamic fintech within different jurisdictions. Second is to look at the different regulatory approaches and practices that have been applied by the respective jurisdictions. Third, the challenges and trade-off in terms of innovation and financial stability and resilience. Okay, so those are the important things that we want to consider this morning, and we have about until about 10:45 to discuss on this. But just to share you a bit about what some of the developments, particularly in the context of what I'm doing now. I'm a president of a university in IFSB in Malaysia, but the way Malaysia does, and of course Sharifah Hanizah will be speaking in greater more detail, particularly in the context of capital market. In Malaysia, in promoting Islamic fintech, IFSB as a university is given the mandate to manage a grant fund for Islamic fintech. So the way we do it, we bring market players, fintech companies, we bring researchers, research institutes, so that's the second party, and we bring the third party is the end users. It could be financial institutions, it could be zakat bodies, and fourth, we bring civil societies, and we call this quadruple helix. So the approach is that fintech companies must develop solutions based on the demand of the market. Okay, and to support the development of the fintech solution, universities and research institutes will provide the technology, the brain behind this. And the users could be market players or civil societies. So I'll give an example. Recently what we did, we approved 2 projects, and again another 5 projects will be evaluated and approved. The chairman of our decision body is from the industry. So universities just play the role of managing the process. So the way we do is that we want to foster closer collaboration between fintech companies, the industry players, which mean the users, researchers, plus the civil society. So in this way, the ecosystem is fully developed in order to push forward the development of fintech in Malaysia, particularly Islamic fintech. So with that introduction, I would like now to call upon Mr. Sharifatul Hanizah Said Ali, the Executive Director, Islamic Capital Market Development Securities Commission Malaysia, to give maybe 5 to 8 minutes in terms of her initial thoughts about this development of Islamic fintech, particularly in the context of Malaysia. Welcome, Ms. Sharifah.
Thank you very much, Professor Dr. Azmi. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and a very good morning to everyone. Before I start, allow me to first express my utmost gratitude to the organizer, Islamic Financial Services Board, IFSB, Dr. Bello and team, as well as the host, Saudi Central Bank, SAMA, for putting this esteemed event together and for the great hospitality. I'm not so sure that I can keep to the 5 or 8 minutes, Dr. Azmi, but I will try. Being the first one also, yeah, that can be a challenge. I'm honored to be here today for Securities Commission Malaysia to share some of our thoughts on Islamic fintech and our capital market regulatory approach, alongside my fellow esteemed panelists. Maybe for context, let me just indulge me a bit here. I'm going to share with you some data, some statistics for context setting. Malaysia's capital market expanded by 7% in 2020. We're now in 2020 at about 819 billion US, compared to 771 in 2019. The Islamic capital markets grew by about 11%. It now is at about US $542 billion. Islamic capital market is a key component to the Malaysia's capital market. Today, because I'm from SE, of course, we have the 2 regulators in Malaysia, so I'm going to be focusing specifically on capital markets. It contributes about 60% of the total capital market. And that over the years has been very steady, proving the resilience of Sharia-compliant investments against volatile market conditions, the various cycles and crises that we've seen throughout the decades. In terms of the sukuk market also, there's very strong growth momentum with about 45% global market share for the Sukuk outstanding. And in terms of global assets under management, we're in the top 3 jurisdictions at about 30%. But in the last 18 months, I think the global economy faced a dramatic downturn. The pandemic brought about a change. COVID-19 led to massive loss of lives, livelihood. I think that was the unprecedented challenge to public health, economic growth, social disruptions. And with millions of people at risk for extreme poverty, existential threat, I think small businesses and individuals, especially the low-income category and the marginalized population, was the hardest hit. Fortunately, I think as we're here today, physical for the first time for some of us, at least for me, I'm sure, we are happy to note, I think, that global economies will rebound significantly. Currently, the projection is about 5.6% for this year, and that's the strongest post-recession pace in the past 80 years. That was really attributed to governments and financial authorities giving swift interventions, swift responses to the rapid rate of economic recovery. For SE Malaysia, we also implemented various capital market-related measures. Some of the examples of technology-based measures, we introduced flexibilities in complying with regulatory requirements for capital market participants, especially during lockdown periods. Everyone had to turn to e-service. We had to look at facilitating e-service documentation. We also had to realize that greater access for market-based funding was required for small and mid-cap companies, especially the smaller industries. So SE Malaysia raised fundraising limits. We allowed the equity crowdfunding and P2P platforms to operationalize secondary trading. So with all that disruption, I think the world saw a lot of great innovation. It cuts across various value chains. And in the capital market, you saw altered consumer behavior. Operational needs was different, and big tech had market dominance. But there was also a need, and I think what came up was more inclusive, more innovative and efficient products and services. But with that also came about data, AI, cloud, technology-related risk. That required regulators to rethink our approach in regulating capital markets and enforcing investor protection. Some countries took to protect digital users and digital services, try to create level playing field for emerging innovative companies. So globally, regulators also had to adopt greater use of technology for oversight, surveillance, analytics, to look at forward-looking supervision and policy making. So what were the key ICM-related fintech developments in Malaysia? SE Malaysia has been very active in this role and has undertaken various initiatives to facilitate the emergence of digital economy. Since 2017, we introduced digital investment managers. In 2017, we introduced a framework that set out licensing and conduct requirements for discretionary portfolio management. And I think the interesting bit is that the last 18 months, we actually saw, compared to last year, the license registered, or the licensed digital investment management holders in Malaysia opened 90% more accounts this year. We also were the first in ASEAN to come up with the regulated crowdfunding platform guidelines on recognized markets that facilitated the growth of digital operators. We currently have about 21 players in there, of which there's 1 offering full-fledged Islamic services and 5 offering window. That's in total, the Sharia funds there is about 5% of the total fundraise. But I think what's interesting to share with you is that this fintech-enabled platform have aided close to 4,000 MSMEs in Malaysia. And that growth has been steadily and very much so in the 3 digits the last year. We also have digital asset exchanges. I think to date, we have already approved 4 digital asset exchanges with over 300,000 accounts. And in 2020, the guidelines was to facilitate the development, amongst others, IEOs, digital asset custodians, and digital assets. So there are currently about 5 approved digital assets in Malaysia. And this is basically to enable companies to raise funds through the issuance of that segment. What I also want to share with you is we also wanted to grow this segment and allow new players to come in, enable, and this is where the developmental agenda came in for the fintech. In terms of our approach, it's not just about regulating. How do you grow this segment? Because for SC Malaysia, we're a two-pronged regulator. We hold the regulatory, the oversight role, but at the same time, the developmental agenda. So in 2021, this year in May, we had the first regulator-led fintech accelerator program. And this was to identify innovative startups. But the interesting bit about this one this year was we only focused on Islamic capital market. The value proposition, the problem statement was given to the participants was new offerings, accessibility, but greater integration with social finance. And I think this year our flagship event had showcased them in October last year, where 7 candidates are now showcasing and introducing their businesses and solutions to a wider global audience. So I think in the question of how does one balance innovation and regulation here, in our latest recently released Capital Market Master Plan 3, we are looking at collaborations and forward-looking regulatory technology. The word RegTech and SupTech comes up a lot now in conversations where we look at improving compliance outcomes, strengthen reporting, and better manage risk. In SC Malaysia, I think the word I would use here is we try and strike a fine balance between innovation and regulation. So we adopt the principles of proportionality for any measures to liberalize and rationalization. It's about how do you correspond the needs with the characteristics of what you are going to be oversighting, and that's the right touch there. I'm going to stop there, Prof, and continue with any questions later. Thank you.
Thank you very much. Okay. Because my approach this morning is to get the two regulators to speak first. And then we have industry player and we have a standard setter. So the second speaker will be Mr. Iman Shah, Deputy Commissioner Financial Services Authority, or what they pronounce in Indonesia as OJK. Pak Iman Shah, the floor is yours.
Thank you, moderator. Thank you, Prof. Hasbi, for the opportunity as well for OJK to share our approach on how we are handling the issue of fintech, in particular, how that link into our Islamic market here in Indonesia. But at first, again, on behalf of our commissioners of OJK, I would like to thanks for the committee for inviting us to this event, as well as to Dr. Bello and the team from the IFSB, as well from the Central Bank of Saudi Arabia. So it's a great opportunity for me to update on how we are approaching the fintechs and also the Islamic financial services concerning the issue of market development as well as the effective regulatory approaches. So I would like to start my presentation with the time allocated. I don't think that I can go slide by slide, so I just highlight which slide that can enhance our discussions later on. So first is about something that is a very quick overview on how we are talking about a fintech. So it's something that fintechs have a uniqueness feature, have a unique features compared to other for the incumbent financial institutions. Where in this context, I think fintechs with the business model, in terms of the risk model, and also the legal arrangement, as well as the intermediation income, as well as disclosure, and in particular how we see about the supervisory approach framework for these fintechs and also the incumbent financial institutions. So mostly that what we had already as a regulators and a supervisor for the financial sector. So we adopt what we call this prudential supervision framework for the incumbent financial institutions, particularly for banks. We adopt policies or standards coming from the Basel Committee on Banking Supervision, and as well as for the Sharia, we adopt as well the standard coming from the IFSB. But for the fintech, I think it's more will be very much the features representing the market conduct approach rather than on the prudential regulations. Why? Because I think so. To our understanding, fintech is very much different from the incumbent institutions, the incumbent financial institution, because of in terms of capacity, in terms of the capital, I think it's really far from what we had or we imposed to have by the financial institutions. So then I think when we adopt or we impose the prudential regulations into the fintechs, I think it's something that we are not providing conducive environment and also this conducive business environment for the fintechs to grow. So there are things we can learn from how we differentiate between the financial institution as well as the fintech. So I would like to share as well in this slide is about fintech statistics here in Indonesia. We do have like up to September 2021 is the data coming from the Uptech. Uptech is our fintech association in Indonesia. We have right now 355 fintech in Indonesia, and what happened is in particular for the area of OJK, we have 101 licensed P2P lending in OJK, and it 3 still registered, so a total of 104. 101 is licensed already, so we have 2 steps of licensing in terms of the P2P lending. First, they have to be registered first, and then afterward, then we assess the readiness of the fintechs and then upscale the licensing into being licensed by the OJK. And I think it's also we introduce as well the equity and auto securities crowdfunding as well. We do have like 7 this platform up to September 2021, and we do hope because it's the platform is providing the opportunity for in particular the retail investor to go to invest, and that one I think will being facilitated well by the introduction of securities crowdfunding. And I think as a regulator we also have what we call this regulatory sandbox. Then there's a venue for assessing the business model, the capacity, and also the risk of these certain platforms. So we do have what we call in OJK OJK Infinity, and it is now we do have 81. The platform we call Digital Finance Innovations in OJK. So, and it is clustered into 16 clustered. So we have 6 Sharia Digital Finance Innovations and 75 conventional one, 16 clusters and 81 recorded in OJK. So total, so on the very bottom, you can see there's a 6 Sharia-based digital financial innovations that's operating based on Sharia business model. So we have like aggregator, we have the things, we have also credit scoring, InsurTech, and the previous speakers mentioned about the SurTech and RegTech. We also have this RegTech as part of our regulatory sandbox. And in particular for digital finance innovations, the Sharia development, I think it's still what we have right now up to September. I think the figure here, the data show us that in 2020, we have 12 recorded, but now it's becoming less, 6 Sharia DFI and now being recorded as in OJK. But in terms of the assets, even though the number is less, but in terms of the exposure and the asset is increasing from 65 billion rupiah into trillion rupiah into 153 billion rupiah. So I think it's something that is quite positive when we can see that the achievement by our Sharia digital finance innovation is quite I think it increased maybe more than 100% in just one year. So how we OJK approach on the fintech supervisions? Well, we are talking about the ecosystems, right? We are talking about the holistic ecosystem for the fintech supervision. So we have something that we provide and we are communicating to the industry, to the fintech market, that we are ready for come up with the regulations that guiding the business of this fintech from the beginning. So I think it's back in 2016 when we first introduced the regulations with regard to the P2P lending. So that start already our commitment, how we are facilitating the growth of the fintech industry in Indonesian market. And we also having like a light touch and safe harbor, meaning that we don't want to impose something that very heavy in terms of the regulations for the these fintechs. But at the end, we are thinking about that it will bring a lot of benefits for the public, for the society. So I think then we are talking about the safe harbor, that everybody satisfied with the services that providing by the fintechs players. So and then we are moving forward to market conduct supervision model. We are now developing this more on rather than prudential supervision, but it's on market conduct supervision. And I mentioned before, but that we have already the regulated sandbox in OJK. We have this 81 digital financial innovations in our exposure right now. And I think that also link into the next one is about a fintech center. So it's we call it OJK Infinity. That's a venue for knowledge sharing activities between us as a regulator and also the fintech player. So there's something that we call maybe is something that we call like examination. So we try to examine the business model, the risk management framework for this fintech, and hopefully then afterward maybe we can direct them where to go for the next further registrations or licensing process for this particular digital financial innovations that had already been assessed by ourselves. And the other one that I think is quite important as well for us, I think this is also similar to other countries, the practice that we have a very close collaborations, a very intensive communication with the fintech association. So we are in Indonesia, we do have this fintech association for Indonesian fintech, but we do also have this that very much special for the Sharia. So we call it APSI. This in Bahasa we call this Asosiasi Fintech Sharia Indonesia. There's a lot of communication because we are still looking for further contributions from the fintech Sharia in the future for Indonesian market, because it's compared to the conventional one, I think still a big gap between the contributions from the P2P lending on the basis of conventional approach compared to the fintech Sharia. So I think in the future, I think we do have like a commitment together that we can facilitate the growth, the increase exposures, and also the contribution from the fintech Sharia. And the other one is, I think, is also very similar to other countries because we are talking about safe harbor. Now we are talking very particular on how we are then talking about protecting the consumer. It is very important into Indonesia in particular because we still have no law on how we are protect personal data security. So I think the government right now is going forward and have a big effort to finalize the law on protecting personal data. So I think that also one of the challenges actually for us, for the fintech as well as for the fintech Sharia fintechs, how they are utilizing the big data, but at the same time they are also concerned with the customer protections. I think I can just skip this one because to some extent I already this is also that what we have right now, that we are utilizing and leverage very much on the association. So we have something that we have a regular communications and also coordinations with the association. With the fintech player, I think that's the member of the association for sure. So we are talking about good governance and also the retech. They are set up like a code of conduct with for the members. And I think for the regulator, we are talking about subtech and the association now. Let's say they are assist us on how we are develop as well the regtech and subtech. Which one we consider like in the capital market association is something like a separate regulatory organization, because back to our approach on how we are conducting the supervision is actually more on market conduct. So I think we rely a lot on how we can have the support from the associations for the fintech associations in our market. So I think this is something that I want to be very quick on this. This is only just showing us the current progress and the development of Sharia finance in Indonesia. So, but I think to some extent, maybe we can see here that the Sharia market, in terms of how they are sharing the financial asset in Indonesia, is only still 10% compared to the other that the total of financial asset here in Indonesia. So I think still we are struggling actually. I think when I was in the central banks about 8 years ago, and I'm what is it? I was attached mostly in the banking policy regulations. We are talking about how we are increasing the Sharia market into our domestic financial sector, but still, we are struggling to increase the percentage of the market share of the Sharia financial sector into the total of Indonesian financial market. But anyway, that's a journey, right? We have to do not stop, and then we satisfy with the figure that already now at 10%, but still challenge is a challenge for us in Indonesia, that in the future we can even increase the number of the share of the financial or the Sharia finance into the Indonesian financial market. So the number is down there, but I think it's something that I think in terms of the achievement having by Indonesia as well, that the indicator or the parameter that is here, let's say in terms of our global Islamic economy indicator score in 2020 2021, we rank number 4, and also the other index, the other indicator, I think it's still something that we don't want to be very much that we feel it's sufficient, it's already enough for Indonesia, but I think we have a big challenge, we have a big aim, a big goal that in the future that Indonesia can contribute more on the Sharia market in the global market. This one is actually the other showing us about the Indonesia Sharia financial asset in Indonesia in terms of the banking, the non-bank financial institution, and the capital market. But I think similar to colleagues from the Malaysian securities market, capital market in terms of the Sharia financial asset representing 61% already is the biggest part of the market share in Indonesia, and then followed by the banking sector, and then the non-bank financial institution. But again, I think the challenge again for Indonesia is actually when we had this target for the banking to maybe even better or even bigger than 5% of the total of the banking sector as financial asset. So things okay. This is the one that I think in terms of the capital market, how is we are try to leverage on ideas that we want to support the Sharia capital market. So we have already the Islamic capital market roadmap 2020 up to 2024 with direction number number 2 is strengthening and developing the Islamic capital market infrastructure. So the program is, I think, apart from 3 programs that we have, we do have number 2 that addressing the issue of financial technology to support the Islamic capital market. So, and then what is really the action plan that we have right now is, first, for sure, we try to optimize the utilization of blockchain technology in Sharia capital market. So we have the study already in 2020. And then second, talking about how we are using the crowdfunding platform to promote the micro sukuk issuance. We issue already the POJK number 57 2020 regarding the securities offering through crowdfunding platform based on information technology. This is what we call securities crowdfunding. So I think it's more fit to the retail investor to go to the capital market, and this is POJK given give the guidelines for this retail investor. So, and then the third one is supporting the establishment of Sharia crowdfunding platform. There are already several platforms that support the issuance of Sharia securities crowdfunding. Consists of one full-fledged Sharia platform and platform that have Sharia units. So that's really in practice that not only that we have the platform that really full-fledged Sharia, but I think we accommodate as well platform that have a window Sharia. So hopefully this is like the collaborations in terms not only that the one that recognize that full-fledged Sharia, but also maybe the parent or of this platform, they are operational based on the conventional, but they have the Sharia window, the securities crowdfunding window that also facilitate the potential of increasing the securities crowdfunding based on Sharia principles. And the other that how we are talking about utilizing fintech to support Sharia capital market. So as of October 8, 2021, the IT-based Islamic capital market. So we have this Sharia online trading systems, and also we have capital market activities based on information technology. We have the RUPS. RUPS means general meeting of shareholder, and e-voting. We have the POJK that support that practice. So we have also initial public offering. We have also online mutual funds transaction system.
Okay.
So the online mutual fund transaction system, we have something that in detail talking about the mutual fund selling agents, how many the online outlets, investment managers, and also the e-commerce. So hopefully
thank you.
whole...
Pak Iman Shah, because we need to allow the other speakers as well.
Okay, just one more slide. This is talking about the micro wakaf bank development. So in terms of the non-bank financial institutions, something that we come up with like the initiative that we have this initiative, what we call this bank wakaf micro. So I think it's also representing rural areas and how we are now moving forward to also to impose or to utilize the fintechs and also the IT technology into the bank wakaf micro. So hopefully, all in all, I think at the end, this can assist us, in particular how we are develop the fintech, in particular how we are contributing more on the Sharia financial market here in Indonesia. So I stop here and looking forward for more discussions on the topic. Thank you so much.
Thank you.
Assalamualaikum.
Waalaikumsalam. Thank you, Pak Iman Shah. Now we move to Mr. Ijlal. I mean, if you see the slide in Indonesia, they talk about micro sukuk issuance based on blockchain, and you shared with me about the smart contracts and the difference between smart contracts and digitized contracts on the basis of blockchain. So maybe you may want to elaborate on that and link with micro sukuk issuance.
Sure. Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillahir Rahmanir Rahim. Really grateful to the host, Saudi Central Bank, for their hospitality. Indeed, it's exemplary. Really grateful. Grateful to IFSB and Dr. Bello for inviting me and IFM. Indeed, pleasure to be here. I will like to just cover two aspects. One is Of course, the smart contract was one initiative one can look at from the digital future point of view. But I would like to also update on the digital future for financial markets also. Before that, I would just like to mention what IFM do so you will understand where I'm coming from. IFM is a regulatory heritage and has developed the standards, and we have 15 standards so far, covering hedging, which we started as a, our pioneering sort of role in that risk mitigation segment, which we have a number of standards there. Liquidity management standard, we have Sukuk standards now, documentation, of course, and we have also some trade finance related standards. I will also encourage you to look at the global benchmark rate reforms, which is happening now. The world is moving from the LIBOR towards what we can call it alternative benchmark rates or risk-free rates. So we have a very good white paper which you can benefit, and we have now issued one standard for solution to implementation of risk-free rates for Ijara and Murahaba, syndicated Murahaba in particular. Some of our standards we do jointly with other international global bodies. And from that angle, we signed up with around 6 entities, international entities and some banking associations, digital future for financial markets. And this is just joint commitment to define and promote the development of digital future for financial market. And the aim is to identify the initiatives which are as per our mandates, and it could be IFSB mandate also. So we are not really sort of defining here the actual mandate, but the idea is to promote and define what can be done. So if you look at it from the angle of G20 at the time of wake of financial crisis, they have introduced some new sort of financial regulations to overcome the financial crisis. And this has put a lot of pressure on the operating structure of bilateral financial market. So you have unstructured data in that case, you have bespoke paper-based contracts, and you have complex, inconsistent requirements between different asset classes. So what we are looking for now for the digital future is adaptation of common data and process standard across the industry, will allow for consistent aggregation on financial data and more comprehensive risk assessment of supervised firms, which will lead to greater confidence and financial integrity. So I think this is something which is very much needed. We are also looking at increased digitization, which will improve risk management through greater alignment between contracts, process, and data, and will allow for introduction of real-time regulatory oversight. So this is something, of course, area for IFSB to look at also. We are looking at also increased automation, will promote efficient and cost-effective operational process and reduce complexity, and will allow firms to deliver better and more effective services. There are a series of objectives and principles one can drive, and there are 3 things which we look at, and we call it SDD. So standardization, digitization, and distributions. So these are the 3 sort of areas one has to look at it, and there are many sort of initiatives one can really drive. Critical to the success of these principles and objectives is the involvement of regulatory bodies, and we have a number of bodies there with IFSB, and their commitment in this regard. Of course, the coordination and collaboration is the key, and alhamdulillah now we have a better coordination with IFSB in particular, and also AOFI, given our work as a standard setting body. COVID-19, of course, has highlighted the urgency of these efforts to circumvent the infrastructure which has come into considerable strain. And we have to accelerate these efforts towards the financial market reforms and digitization, embracing transformational changes and adopting strategies is something which we have to all work together. Based on that sort of principles and objectives, we jointly wrote to Financial Stability Board, ISCO, and Basel Committee to just inform them and to seek wherever there, as per our mandated area, there is an initiative, then we can certainly get their involvement or cooperation in that regard, which I'm sure AOF also, IFSB also do. So these are the sort of something which we initiated last year, given our close association with international bodies, which work in the area of standardization of contracts, which we do. And alhamdulillah, some of our contracts with Saudi Central Bank, our hedging contracts are now used in Saudi market also. They're used globally, but it's very pleasing to note they're used in the banks also, and they're used with the big corporates also, given Saudi big economy. Looking at sort of financial side, now the contract side, which Professor was alluding to, which I wanted to also cover, is you look at sort of digitization of contract, which one thing which inshallah we'll be able to do. And the other is sort of, I think, more challenging aspect, which is the smart contracts. And the smart contracts simply, it's some of the points which I like to highlight. It's a contract which automates tasks. So this is one aspect of the smart contract. It's use, of course, the software codes which you need to develop. They make process, of course, more efficient and faster, and they improve the performance. They work well with both distributor ledger technology or ledgers, and can be used with other technology platforms. So it's sort of provide that flexibility. One thing we should be mindful when we are doing sort of digitization, you can do the entire contract to digitize. But when you are looking at a smart contract, you are actually looking certain tasks which can be sort of automated. So you're not really doing the entire contract, it's not possible. And I will just mention few of the things to make you understand. So it could be calculation, let's say, for trade finance, for example, transactions, which could be updated. Certain sort of processes can be operational, can be put it, and you can take out those and put it into a smart contract form. So it's not the entire contract, if one were to ask. It's those tasks you have to identify to make it more efficient. And then certain terms, if there is a logic, you can use your technology. But if there is no sort of logic is used, it's more, this human intervention is there, then naturally that will be difficult in the contracts to really put it into smart contract form. But you can blend both the worlds, so you can have your smart contract which will improve the overall architecture of the financial system. And then if you look at the code, code is generally not a law. So I think what we sort of see that from the legal perspective and legal regulatory perspective, the work needs to be done. So you have to see where the counterparties are based. So what sort of a law you will be doing. Generally, we are talking about cross-border markets. Islamic finance is, alhamdulillah, growing. So you have to see, what law, whether law will provide that. Of course, we always have, the judgment of courts and all. So there is no precedent in this case when we are doing that. So these are all sort of things which one has to see. Then we have to see the terms of sort of the contracts. What are the terms it specify? And how the terms can be changed? So if the terms can be changed sort of manually, you agree something. So naturally, if you put it in the smart contract form, that will create a problem. And do the terms contemplate operation of laws? So again, I think this is whole sort of your regulatory or your legal system if something is needed. That's where we are assessing. We have done several sessions on this in our various events. What IFM also do is they organize some consultative meetings and also some specialized event. And we sort of talk about the subject, and before we do move into the consultative phase. Also, you look at if it's a contract, then if the terms of the contract are breached, so what will happen? So you may have some automated payments, which are you already sort of put it in automated form. So you have to really stop those automated, payments, and that can lead to sort of, not meeting your obligations. So again, you have to look at your law. So these are some of the things which we have to be sort of mindful when we are looking at the smart contract. And this is something which, from IFM perspective, we are sort of assessing at the moment. Since it's a huge task, naturally we may need to collaborate in this front, and we also need to work together in this. So this is one sort of a small subset which I thought, given the time available, I will just try to cover. But like I mentioned, I mean, there's a huge task on the data side, which IFSB does, but I think we also tried previously. I think what is missing here in Islamic finance is the data of the transaction data. Because the transaction data basically allows the regulator to assess how the business is going, and also see if it is driven, on the right principles, if there is no sort of over trading, if I may say, in some cases. So it gives you that sort of, an oversight if there is something going wrong. So we don't have really at a sort of a global level the transactional data available for the key sort of products which are most widely used in Islamic finance. So I think that's one of the key things which I feel that's required, for us to work together. It's a huge task, but that's something probably needs to be looked at it and making it more sort of available online on time basis, so that the better judgment can be made. So this is my small.
Okay. Thank you very much. Okay, thank you very much, Mr. Ijlal. Due to the time constraint, again, we have listened to two regulators, one standard setter. Now let's listen to a market player where he'll be talking about, the fintech development in Africa, and subsequently, as a market player, how does he see the fintech regulation? What he aspires, the kind of regulation that he should have. Again, the floor is yours, Mr. Akina.
Thank you very much. If my slides could be put up.
Bear in mind, I think we have about 10.
Yeah,
so that
I know.
We can allow for question and answer.
Okay, cool. Thank you very much. I think Africa has actually experienced a very, very huge growth, in fintech development over the last 6 years. We've seen up till date about 576 fintechs actually headquartered in Africa. Not only that, over the last 2-3 years, we've seen a huge inflow of funding into these fintechs in Africa. Year to date alone, we've seen more than $1 billion, that has been invested in the largest 3 fintechs on the continent. You see most of this in Nigeria, in South Africa, and in Kenya, with some of them actually coming up in Senegal. Now, we've seen also that the focus of these fintechs have largely been in 3 areas: payments, digital banking, and wealth management. Now, how has the regulatory framework been supporting the growth of fintechs on the continent? We've seen different regulators, especially in the largest economies like Nigeria, South Africa, Kenya, actually coming up with regulations to support, or to manage the growth of fintechs. We've actually seen a bit of pushback from some of the fintechs that those regulations are actually inhibiting their growth. So the challenge is, how will that balance be struck? How can you strike the balance between allowing the fintechs continue to grow as they aspire and actually ensuring that they don't blow up the system, especially when you have investors putting their money behind these fintech operations? Islamic fintech hasn't had a lot of growth on the continent. To date, we have just 10 Islamic fintech that are actually of scale. We have quite a number of them that are trying to grow, but they lack significant amount of funding. and they are still either in sandboxes or still being tested. So there's huge opportunity for Islamic fintech to grow. And like I said earlier, most of the growth we've seen so far have been largely in payments, wealth management, but there's so much opportunities for Islamic fintechs to grow, as we saw yesterday during the presentations by Lendo and Sukuk Capital. We still have opportunities in social finance that has largely been untouched in the growth process of fintech on the continent, and we think this is an area that the regulators could actually support. We also believe that with 41%, of the population of Africa being Muslims, that already gives us a huge amount of opportunity in terms of market, for folks to utilize Islamic fintech, and we think that is an area that has not been fully developed. What are the challenges we are seeing with the regulators? I think I will be able to categorize that into about 4 categories. The first is still the lack of, like we saw yesterday, lack of appropriate regulations, that are Sharia inclined and are also supporting the growth of tech, on the continent. The second aspect we see is that the level of collaboration we are seeing, thank you. The level of collaboration we are seeing from the regulators is still not as robust as it should be. We see regulators coming up with instructions or guidelines that they think will be expanding the growth of fintech, but actually they are inhibiting the growth of fintech. We've seen some Islamic fintechs that have tried to actually scale up, but whenever the regulator comes up with some guidelines, they realize they either have to shut down and go back to their drawing board, or they will just run foul of the laws. So we still need that high level of collaboration between the regulators and the fintech to be able to grow properly. Nigeria today boasts of about 3 unicorns. Now, boasting of unicorns that are just conventional players may be a good thing, but it also tells us that there is huge opportunities for potential growth in fintechs. And we think that a higher level of collaboration, appropriate funding, appropriate engagements, with all these brilliant guys at the various innovation hubs on the continent can actually lead to a higher level of fintechs in the Islamic finance space. Thank you.
Okay. Thank you very much. Thank you very much, Mr. Hakim. I think we have covered from regulators, from standard setters, and market players. And Mr. Hakim gave you a broad overview about the fintech development in Africa, as well as the issue of what a market player wants from a regulator. We do have some time for about 15 minutes. I would like to now open the floor for question and answer session. Anybody would like to raise? Because I see in Slido there's no question, so maybe we can get in-person question. Yes. Maybe the first question? Yes.
Thank you. I'm Samar from the Central Bank of Pakistan. So I have a couple of questions from Sharifatul. The first question is about your internal structure. I mean, how does SEC in B&M operate in terms of regulating fintechs and developing fintech? I mean, are the same people do the both activities, or they are different sort of group that some do the development side and some do the regulation side? So that's the first question with respect to the SEC in Malaysia. The second one is, which is more important and relevant to the first one, is the level of coordination between SEC and the central bank, because traditionally it's always considered that the SEC are relatively liberal regulator compared to conservative regulator, which are normally the central bank. So in terms of development of fintech regulations, things like that, what is the level of coordination? Is there a structural mechanism, or what sort of coordination is there? Thank you.
Thank you very much. Anisa?
Thank you for that question. It's a question I think often asked because of the structure that we have in the country. The issue of separation or the issue of overlaps does not really, it is not something that has inhibited any growth or initiatives that we do. SC Malaysia looks at the capital market, and Bank Negara looks at the banking and financial services, so that itself is a very clear demarcation. And where there are, I think, similarities in terms of target market or objective, for example, both Bank Negara and Malaysia looks at inclusiveness and the ability of fintech being as an enabler for the various stratas of the society. So we would work towards it based on the products and the verticals that is there. Because obviously we start, when the conversations probably started many years ago, capital markets would be seen as something that is for a different level of the society until you see that it's actually able to bring market-based funding options to the businesses, for example, to the smaller businesses. And therefore, we actually try to encourage that as an evolution. For example, the bigger companies might go for the traditional segments of funding, and the smaller ones may require market-based simply because they don't have a credit history. Credit scoring may be a challenge, and therefore equity crowdfunding and P2P is within the realms of SC. And I think that's where the working is together. We do have different networking platforms that we allow for the various segments to come in and understand. For example, SC has Affinity, and Bank Negara would have a separate platform for the different needs. But there is always an open conversation between both parties. I think we work together. Within SC itself, I heard your question about how do you separate regulation and developmental. Within SC itself, we have different business groups that look at it. Supervision is done separately. Regulations are done, oversighted differently. And developmental, for example, where I am in, it's looking at Islamic capital market development. But again, the balancing of regulation and developmental, even within an organization, cross-functionalities naturally happen. So it's a matter of ensuring that we understand what the initiative is, what is it for. So just to add a little bit more to that answer, in the Capital Market Master Plan 3 that we just released in September, I wanted to share with you that the key strategic thrust that we have is to ensure we achieve 3 desired outcomes. I think as a regulator, when you balance regulation and developmental, we want to make sure that we continuously innovate, but we must remain relevant for the industry, for the people, for the investors, for the players. But at the same time, you want to make sure that you provide efficient capital mobilization. And that's important for the different strata and reliable infrastructure. I think that's something that's required even as a consequential as an outcome of regulation or development, and building a diversified market ecosystem. I think that's where we use different tools to reach the end outcomes. So to answer that question simply, I think it's a harmonious working environment. It's worked very well for us. And I think to add to what Prof. Azmi had said earlier, FinTech, we are one of the biggest players. A lot of them are in the banking side, definitely for now, in terms of payment gateways, etc. But in the alternative space, we provide a different option for those that are not able to go to the traditional banking to look at market-based. Thank you.
Okay, thank you. Mr. Jalal, you want to add a bit on that?
Yes, just one point which I missed, I think is very critical, is looking at it from the point of views of reduction of credit exposure and reduction of required regulatory capital. What we require, we have sort of this early termination events and defaults. And what you require is a closeout netting law for reduction of, regulatory capital or credit exposure. And we have seen sort of, this closeout netting law being sort of federal, UAE federal government has issued. We have in our contract sort of legal opinions for that, which are very important. And I understand this is some work which has been done in Saudi Arabia and also in Pakistan and other countries. And I think this point, also is critical. When we have sort of this digitization happening, we look at sort of how, the uniform law, if we have, that also assist in terms of, creating greater stability. So this is something which I just wanted to share.
Okay, thank you very much. May I open the floor for another question? Is there anybody who would like to ask question on this issue? Any question? Yes, please.
Assalamu alaikum.
Wa alaikum
Thank you
salam.
so much for your meaningful and valuable speech. So my question is that since the P2P is decentralized, and as people say that it's regulated itself, so do you think that is it possible to regulate it without the agreement of international? Thank you.
Can you repeat the question? It's not that
Yeah, I mean P2P is decentralized.
decentralized P2P.
Yeah,
Yes.
yeah. So it's easy to regulate it without agreement with the countries.
Okay. It's basically regulation of P2P, decentralized P2P. You may answer, and then maybe we can get Mr. Iman Shah as well to respond.
Maybe we can get Mr.
Okay.
Iman Shah to answer first.
Okay. Pak Iman Shah, are you still with us?
Yes, thank you.
Okay. The
Thank
question is
you,
about decentralized P2P and how you regulate.
Yes.
Yes, again.
Well, I just want to, let's say, given the illustrations for the questions that raised by the attendees. So when we issued the regulations on P2P back to 2016, so it's something that there's a lot of questions within the OJK itself about questioning ourselves whether this is the P2P is the financial institutions or not. That's really the big question that we have to answer at that time. But you know, what happened to our board of commissioner at that time is, okay, I think to some extent we cannot really define that this P2P is financial institution because of this unique characteristic of the P2P. And they are talking about that the contract is actually between parties. So we, compared to bank is intermediary, but P2P is about the investor and also the borrower. So the platform is only just facilitating the contract, right? So it's very, very valid that we say that we can see that the contract is, let's say in the legal view, it's talking about private contract. So it's between parties. There's no like regulators or supervisors, and for sure there's not something that is the concept of decentralized is there. The disintermediation is there. So then what happened is if we consider this is not a financial institution, so why bother for the regulators, for the OJK as a financial regulator and supervisor issue the regulations on P2P. So the question is the answer is one is something that we very much concerned with the financial system stability. So when we have this information on who is the player for the P2P and how much is the exposure. So we're very much concerned. We try to mitigate the shadow banking risk at the time because we can monitor, we can control, and we can have the report from the players. The second one is the issue is with regard to the customer protections again. So then we are talking about everything must be on a very governed practices between the investor and also the borrower. So then we, I mentioned before, we asked also the association to contribute how we are approaching the fintech regulations. So back to the question, yes, I think if you just put this under the contract itself, yes, it is something that I think as a regulator, we don't want to put ourselves and having also our effort to supervise this platform. And I think when we have this issue right now in Indonesia, with regard to the illegal, quote unquote, unlicensed P2P lending, the issue becoming even worse for us, for ourselves. But again, if we put this under a legal framework, so it is really a private contract between parties within the P2P lending practices. So I think that's really the answer from my side on how we are, perceived and understands about the P2P lending practices. But again, we come up like regulations that we tried ourselves to issue the regulations, and we put at the first is benchmarking with the existing regulations applied to the banking sector. So we put a risk management, we put a capital requirement, we put as well the anti-money laundering and all those things in our regulations with regard to the P2P lending. But there's no really a standard that we can have like a benchmark for what are areas that we want to put into our regulations.
Okay.
Because it's something that, again, this is much more on private contract between parties, not really between, incumbent industry that we have the standard from, let's say, BCBS or IFSB. So I stop here. Hopefully
thank
I
you.
answered the
Okay. Thank you very much, Pak Iman Shah. Maybe, you want to?
Yeah,
Okay.
maybe I will add from our perspective to that question. I think if you recall, I mentioned that for SC we adopt the principle of proportionality, and that's where when we look at innovation and regulation, I think for ECF P2P, how we manage it is that we look at it as something within the ambits of an investment or of a capital market product, but how we govern it is, how we oversight is basically we look at the governance. We have a light touch there, but we do have some areas that we actually list down in terms of how we do the oversighting. So it's not, I think as you say, the decentralizing, it doesn't apply in that manner because we still look at governance. We underline and we outline what the risk management requirements are. We look at how they do user onboarding. We look at client asset protection. We look at arrangements, cybersecurity, system integrity. So it's not actually just letting it out there, but given guidance, but with the right touch, so that it is, at the end of the day, taking into account both parties, whether it's the issuer or the investor, in the realm of a capital market product.
Okay. Thank you very much. Since we have exceeded the time, just maybe I would like to get Mr. Hakim, as a player, what do you think about this kind of P2P requirement?
Yeah, thank you very much. Yeah, I think for P2P, we still need the regulators to be quite involved. We've seen a bit of a pushback, especially in Nigeria, where the central bank actually came up with regulations, and it felt as if they were actually encroaching into the roles of the Securities and Exchange Commission in Nigeria. So if we could have a lot more collaboration between the regulators to assist us in monitoring and regulating the P2P transactions more efficiently. Yeah.
Thank you very much. I think we have exceeded our time, in fact, by 4 minutes. Again, we thank the audience here for giving your full attention to this session. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi ta'ala wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you so much.
Thank you.
We thank the ladies and gentlemen, the speakers, of all the information they provided us about the fintech, and our thanks extend also to their excellencies and distinguished guests. Now we will go into a short break that will continue for 15 minutes, and then we shall return to continue the remaining sessions. We would like you to remain committed to the break time and to be back within 15 minutes.
Please be here on time. 15 minutes. That's 1-5. Thank you. السيدات والسادة الكرام، سنبدأ بعد لحظات من الآن. نأمل منكم سرعة التفضل بالجلوس على مقاعدكم. Ladies and gentlemen, we're starting now. Please take your seats. الإخوة والأخوات الكرام في الخارج، ندعوكم للانضمام إلينا هنا في القاعة الرئيسية، إذ أننا سنبدأ الآن. Ladies and gentlemen outside this hall, please join us. We're starting now. إذن بسم الله الرحمن الرحيم، نبدأ الجلسة الخامسة من جلسات هذه القمة، إذ نرحب بكم مجددا في جلستنا الخامسة.
We welcome you again in our fifth session for the third day of the summit of IFSB board titled Effective Use of Supervisory and Regulatory Technology by Authorities and Regulated Islamic Financial Institutions, and then we will be discussing the best practices in this regard by a panel of experts and specialists. This session will be moderated by Mr. Zamir Iqbal. I welcome Mr. Zamir to the stage.
Bismillah ar-Rahman ar-Rahim. May I request our distinguished panelists to come on the stage, please? So I'm very pleased to welcome you to this session, which is focusing on the effective use of supervisory and regulatory technologies by the authorities and regulated Islamic financial institutions. We have a very distinguished and learned panelists. Two of them are physically with us, and two of our panelists are online. We welcome you. Thank you so much being with us and for your participation. Now, I think that as the theme of the whole event is more on technology and innovation and technological transformation, it is very important that we hear from different experts on how it is changing their work, how it is changing their the way they work. Is it making it more efficient, better, and enhancing their efficiency, or is it causing more challenges, and what needs to be done? We have a very good, as I said, very balanced coverage. We have one regulator, one Sharia expert, one expert in the financial sector, and then one academic plus the practitioner. So with that, I would request our first speaker, His Excellency Dr. Yaqub Askaraya, who is the second chairman of Banking Regulation and Supervision Agency in the Republic of Turkey. So Dr. Yaqub, please tell us that how the technology is impacting you as a regulator. I know that you have at least 7 participation banks, which are very well, has quite a long history. How it is helping you both on the participation banks as well as for the conventional banks. And I understand that you have a presentation So please, if Dr. Yakub's presentation could be.
But there is a problem, I think.
Okay.
But I will
please go ahead.
Start from here. Yeah. Thank you, Dr. Zamir. Assalamu alaikum. It's my pleasure to be speaking to you here today. As Dr. Zamir Iqbal said, technology brings a lot of opportunities for regulators and financial services industry, and also some challenges. So let me start with the positive side and what are some of the opportunities here. Of course, there are many things like application programming interface, for example. This is a very promising technology. Web services, we've been using this for a long time, and this is also very helpful. Of course, some new trends like machine learning and predictive analysis, and how to deal with big data. There are some technologies related to data mining and analytics. So these are some new technologies. There are also cloud computing and related cost savings about cloud computing. And of course, there is the blockchain, right? We still don't know how to make best use of blockchain technology in Islamic banking and banking in general. There are also some visualization solutions that's brought by a new technology. And these can be used by our banks and by us, of course, by the regulators. And they offer many benefits, like in terms of time savings, in terms of reducing costs, in terms of increasing the availability of information, increasing compliance, and of course, data analytics. Sorry. Let me go to some detail about what we do at the BRSA. Let me move to what we do at the BRSA. For example, we do off-site monitoring, and of course everybody does it. What we do here is basically increase the available information for off-site monitoring, and we pretty much have systems that can do stress testing and scenario analysis using these information systems. We can, of course, calculate ratios, defined ratios by legal regulations or for supervisory purposes. We can do sector analysis and peer group analysis. All of these have been available for a long time, but these have been also improving over time. A specific example that we use, that we can tell, is the information systems audit reports. So these information system audit reports can be prepared by the BRSA or the independent auditors. And independent auditors do these reports every year, and depending on the institution, we also go to banks and other financial services providers either annually or sometimes biannually. And there is the information coming from these reports. And this is basically used for risk management purposes. We have independent audits, we have BRSA audits, there is also the internal audit of the bank, and all of these come to the BRSA and evaluated there. Basically, we have this three-tier approach, and all of these audits are interconnected. For example, the workings of this is starting from the independent audit contract. The bank has the audit, and then the report is issued. Then comes the compliance check, if there is any issues related to the compliance with regulations, and the audit report also reports these. Then the BRSA evaluates the reports and, if necessary, asks for explanations from the institution. And then the institution might have to prepare an action proposal depending on the findings of the report. Then the BRSA can either sanction or give directives to the bank. Then we have the monitoring of these directives by the audit firms in the future audits. So this is a very useful system for us. We've been using this for a long time, for at least 15 years, but it has been improving over time, and it has been getting more digitalized over time. Let me talk about some data issues. Of course, SUBTech and RegTech also provides a lot of area for data gathering and data analytics. In the past, we know that we used to have some sectoral magnitudes, sectoral numbers, and we had some ratios related to the banks. Then we had more granular data, and finally we have customer-based data or transactions-based data. So in the old days, we didn't have much transactions-based data, but now the technology allows us to obtain transactions-based data or customer-based data, and these are very useful in terms of data analysis. Of course, as many supervisory authorities, the BRSA also collects many reports from banks, including Islamic banks, of course. And overall, we have 121 reports that come online, that is delivered online to the BRSA. We have also other institutions like non-bank financial institutions. We also get reports from independent audit firms, etc. So all in all, we have 192 total reporting sets. And of these, more than 100 are legally required sets, and the rest, about 90, are for supervisory purposes. And we also have different periodicities for these reports. We have mostly monthly and quarterly reports, but we also have daily reports depending on the needs, weekly reports, annual reports, etc. Of course, this data availability has allowed us to provide more information to the public. We have, of course, bank data about what, it's more aggregated data about banks, about Islamic banks separately, and other types of banks separately. We also have information for consumers, like the prices and service charges service charges by banks. So people can go to our website, for example, and compare the price of, say, transferring some amount of money to another person at a different bank. So they can go to our website and check how much it will cost for them to transfer money, or how much it will cost them to obtain a particular credit card, etc. So these are some examples of how we use this data. Of course, recently we had some issues related to COVID-19, right? Everybody, like everybody else, during the COVID-19 period, many banks moved to working from home type of work environment. And of course, this brought a lot of risks, especially cyber risks. So we tried to minimize these risks by asking banks to do some things about these work from home environments. For example, we asked them to use two-factor authorization for their employees. We put IP restrictions so that only the employees can connect to the bank's systems. There were also usage time limits, etc. So we had a lot of regulations related to working from home type of business. We also introduced some new regulations using the technology. Since technology has been moving very fast in recent years, our regulations were starting to lag in terms of catching the technology. So what we did is to change some of our regulations so that we allow, for example, banking as a service. This is one example. This is gonna come into enforcement pretty soon at the end of this year. The regulations is out there, but it has not been implemented yet. Banks are moving in that direction. Of course, this allows many other non-bank technology firms basically to offer some banking services using banks in the background. We had some examples of this outside Turkey. For example, one of our banks, Islamic banks, had a subsidiary in Germany, and they were using some other banks' systems as in the background to provide their services. So we are allowing this same thing in Turkey right now. We are also introducing some new things about how banks can obtain customers. So in the old days, people had to go to a bank branch, present their identification card, and open an account. Right now, since last year, yes, right after the COVID outbreak, we started to allow banks to obtain customers using some online mechanisms. So they show their ID to a camera, they show themselves to a camera, and they agree to terms and conditions of a contract. Basically, they become a customer of a bank. So these are some of the new things that we are dealing with right now. Of course, we are also thinking about what can happen in the future. For example, is it possible to have real-time automated supervision and enforcement? So as the technology improves, that might be possible. It might be possible to obtain real-time data from banks and financial institutions. There might be something about machine-readable regulations and reporting utilities. This might also be another thing to think about. And of course, it might be helpful to get the opinions of the audience about these. Continuous and automated regulatory adaptation. How can we make our regulations more dynamic to adapt to the new technology? Big data, how to deal with big data. Of course, we have some things using big data, but I don't think we are at the point where we can say this is good. We are still at the development stage about the use of big data. And of course, the distributed ledger technology, that's also an interesting thing. For example, we can think about supervisor as a node in a distributed ledger. So is it possible? We have to, think about these and maybe obtain your ideas also. And with these, I would like to thank you for listening, and I'd like to stop here.
Thank you, Dr. Yaqub. It's really very fascinating to hear that how you have adopted technology, especially during the COVID-19, the challenges you face COVID-19 is very, very fascinating. So next we move to our next speaker, which is Dr. Bashir Aliyu Omar. He is currently the Deputy Chair of the Financial Regulation Advisory Council of Experts with the Central Bank of Nigeria. And I believe he informed me that he is also on the Sharia board of the Islamic Development Bank now. MashaAllah, welcome to the family of IDB. So Dr. Bashir, I would really like that you share with our audience that people may not be thinking that yes, the technology can change the way the Sharia scholars look at things. Maybe what are the challenges or the questions coming to you, or looking at, does it helping you technology with the new questions coming up for Sharia, or is it making it more complicated? What are your thoughts? Have you come across any such thing of this during this transformation?
Thank you, Dr. Zamir. Bismillahir Rahmanir Rahim. Alhamdulillah. Wassalatu wassalamu ala Rasulillah wa ala alihi wa sahbihi wa man wala. I will start by first thanking our host, the Central Bank of Saudi Arabia, for hosting this summit and for affording for quite a number of us the chance to perform Umrah after the lockdown. It is really a great privilege. Thank you very much. I also would like to extend my thanks to the Secretary General of the IFSB and his staff for organizing this summit and for choosing also Saudi Arabia to be the venue for this summit after the lockdown from the pandemic. The theme also is very apt to what the world is going in, the digital transformation, the imperative of balancing innovation with resilience. Innovation is a natural trajectory in human existence. People have to innovate, and it has been so, and even the Quran alludes to it in one of the meanings of the verse of Surah Al-Inshiqaq, where Allah says, لَتَرْكَبُنَّ طَبَقًا عَنْ طَبَقٍ. You are going to rise in stations after stations. Part of the comments of some exegesis is that this is alluding to human development from one stage to another. And one of the greatest factors of human development is innovation, which is a gift from Allah Tabaraka wa Ta'ala. The relevance of this theme to Islamic finance is that Islamic finance, the central precept and the central principle of Islamic finance is compliance to the Sharia. As we have seen in history, the Sharia has been quite adaptive to human development, from the use of, from regulations regarding barter trading to the use of currency and the identification of the rules of currency exchange, and giving currency a specific consideration which will ensure judicious use of the means of exchange, and not to convert it into a commodity that will lead to rent seeking and exploitation of one group of people by another, to the development of the introduction, the response of the Sharia to the introduction of paper currency and now digital currency. We've seen how the Sharia has been quite responsive to innovations. The current innovation that has brought about digital transformation is an innovation that has impacted on the lives of people in the planet. It is not just in the social or political or economic or financial sense, but also the psychological. What concerns us is its impact on finance, which we are seeing to be so widespread and so fast in changing societies and in changing transactions and relationships. It has been quite disruptive in one way, and in several ways it has been very, very positive in that you can see in it the realization of some of the fundamental objectives of the Sharia. Among the fundamental objectives of the Sharia is the creation of wealth and its generation. And definitely the digital transformation has facilitated the creation of wealth in a very great way. Just take, for example, what has happened in Africa. Startups that have reached unicorn level, that are regarded as valued at over $1 billion. All these startups have been born by this digital transformation. 3 of them, they are in the areas of fintech, and 1 of them is in the area of e-commerce. 3 in Nigeria and 1 in Egypt, as we saw from the presentation of our brother, Mr. Hakim. So the potential to create wealth, which is part of the fundamental objectives of the Sharia in terms of wealth creation, has been realized through digital transformation, which makes it imperative for Islamic finance to embrace it. But then, at the same time, there is the need to examine the other specific objectives of the Sharia in the area of wealth generation, which is the imperative of redistribution of wealth. This is where the role of regulators and the role of supervisors come into being, to ensure that there is effective and judicious market practice that does not empower one section of the society at the expense of the other. We have the regulators' main function and role in the society of creating monetary stability and ensuring good market practice. It is only through their intervention that exploitative practices will be prevented. Exploitative practices of creating monopolies and also the exploitation of one section of the world by the other is worthy of consideration, because in areas where internet penetration is still very low, there is bound to be disadvantage for these societies. There is this effort to create a universal service fund by the telecom companies so that areas with low internet penetration will have this access in order for them to have, in order for a larger section of the population to have access to financial services. This is something that needs to be implemented on a global scale. But as far as the more important issue of consumer protection is concerned, this is where the role of Sharia scholars is very, very imperative. Protection of the consumer is very, very important because intervention is necessary in order to regulate the greed that is there in the human being. And here, I think the question of self-protection is very, very important by the consumers. And how do they acquire self-protection? This is where the role of Sharia scholars come, in redirecting and identifying the Sharia basis of their contracts. The cryptocurrencies that have been used, some of them are quite exploitative, but because they are so fast, realizing what is permissible and what is not permissible needs a speedy response from Sharia scholars. And the delay in coming up with a position it is preventing consumers from self-protecting themselves. Because the only way for consumers to protect themselves is to check, is to follow the tenets of the Sharia. Because the tenets of the Sharia, they are there to protect us as individuals and to protect the society as well. How do you protect yourself? Once you are able to ensure that the transaction that you are going into does not entail unethical and unjust practices, does not entail dealing in haram products, does not entail usury, does not entail excessive speculation, then you are protected and others are protected from you. Many people, they venture into the area of the new fintech opportunities that are out there and that are being innovated without necessarily asking genuine questions. How permissible is this? Is it permissible or not? But the moment the consumer and also the business manager, when he sees opportunities, he tries to find out the position of the Sharia, definitely he's going to be protected. But this will entail a great challenge on the Sharia scholars for them to be responsive, to understand the developments, to understand the new innovations. And this is not an easy thing, definitely. For somebody to, it is a principle of the Sharia that you cannot give a ruling over a thing until you are able to conceptualize it in its proper perspective. Some of these innovations, they are so complex that it is very, very difficult for them to have, for a layman to have a perception of what it is. But that is necessary for us, for Sharia scholars to arrive at the judgment. And because the innovations are so fast, before you are able to deal with one category, another category has come up. Before you are able to understand that category, another one has also come up. So there has to be, this makes it imperative for us in Islamic finance to be very, very responsive because we see this responsiveness as part of the embedded quality of the Sharia, because the Sharia is supposed to be dynamic, it's supposed to be for all societies, for all times. But then there has to be this speed in terms of responsiveness. Another area that is very, very important, where Islamic finance will give sufficient contribution in terms of supervisory regulation, supervisory and regulatory techniques to provide, to check the innovation and to check the harmful effects of innovation is in prudential regulations. We have to understand the risks that are there and complement what conventional measures are being done in order to check the disruption of the digital transformation. And this is the responsibility of standard-setting organizations that are concerned with prudential regulations like the IFSB. There has to be also speed in terms of responsiveness to see what are the kind of disclosures that will ensure transparency and market discipline, that will protect the consumer, and that will ensure monetary and financial stability. And then we don't have to reinvent the wheel. We can learn from what is being done in the conventional arena, and then address it with the specificities of Islamic finance, as we've been doing since the creation of these infrastructure institutions. So this is, it is quite important for us to realize that as far as the Sharia is concerned, innovation is regarded as something that is that has to come, and that we have, as part of the fundamentals of the Sharia, is that anything in the world that is beneficial is permissible, except if there is a prohibition to it. So this makes the area of permissible activities extremely wide. And the area of the impermissible activities, they are very few and it's quite closed. The moment we are able to balance between these and to situate the innovative ideas and the innovative techniques that are coming into existence, within this context, we'll be able to achieve what is there of the advantages of fintech and also avoid the pitfalls and the harmful impact of fintech. And this also includes the harmful impact of fintech on the environment and on the climate, because part of the specific objectives of the Sharia in the area of wealth is judicious utilization of wealth. Allah Tabaraka wa Ta'ala in the Quran says, وَلَا تَنْسَ نَصِيبَ وَابْتَغِ مَا آتَاكَ اللَّهُ وَابْتَغِ مَا آتَاكَ اللَّهُ الدَّارَ الْآخِرَةَ وَلَا تَنْسَ نَصِيبَكَ مِنَ الدُّنْيَا. Seek from what Allah has given you of the world, the hereafter, and do not forget your portion of this world. That is, you use your wealth in order to generate benefit. And Allah Tabaraka wa Ta'ala has said, وَإِذَا تَوَلَّى سَعَى فِي الْأَرْضِ لِيُفْسِدَ فِيهَا وَيُهْلِكَ الْحَرْثَ وَالنَّسْلَ. When he turns back, he goes about on earth to spread mischief and corruption on earth, polluting harming the environment and harming the ecosystem. Is something that has to be avoided through the proper utilization of wealth. This is why the judicious utilization of wealth is regarded as one of the higher intents of the Sharia in the area of wealth protection and wealth creation. So that has to be embedded. And if it is quite possible through the filtrations of ESG to filter those activities and investment activities that are harmful to the environment, this needs to be embedded also in the area of Sharia compliant financing. And this is where the filtrations, the filters of ESG and the filters of Sharia compliance, they merge together and they intersect. And these are all areas where the role of Sharia financing is very, very important. But the most important thing in this is the question of speed, because the speed at which innovations are coming is so high that the response, whether it is the regulatory response or whether even the response of the Sharia scholars is not commensurate with the speed at which these innovations are coming. And this is what we hope to have in the future, not only from the Sharia scholars and the regulators, but also from the standard setting organizations. Thank you very much.
Thank you. Thank you, Dr. Bashir. It's really very good to know that you are providing a very balanced approach, and looks like the Sharia, as a Sharia expert, you are embracing the technology and alerting us about the speed, and we need to be agile to make sure that we act in a timely fashion. So with that, I would like to invite our next speaker, Dr. Nuran Yusuf. She is a senior financial sector specialist at the Arab Monetary Fund. So Dr. Nuran, since you are at the Arab Monetary Fund, you're looking at all the whole region, I think you have quite a big overview and experience of different countries. Could you please share with us, how do you see, what are the challenges or barriers facing the RegTech or SuperTech in your region, the countries you cover, and especially in the Arab country, GCC? What are the challenges and obstacles you see, and what is your experience? If you could kindly share your experience. Before I give the floor to you, I want to remind our audience that there is a poll which is going on at the same time. for this session, asking different questions, and the result of that poll will be shared. I think it's would be very beneficial. So, for example, there was this active poll showing up. So please, we encourage you to participate in this poll, which will help us get the perspective from your side. So with that, I would like to invite Dr. Nuran to please go ahead and share with us your thoughts. Over to you, Dr.
Thank
Nuran.
Thank you so much, Dr. Zamir. Assalamu alaikum wa rahmatullahi wa barakatuh. I'm really proud to be with you in this prestigious summit, and would like to extend my deep appreciation to the IFSB, SAMA, our esteemed audience, and our distinguished speakers. As mentioned by the esteemed speakers, the industry has evolved to propose highly sophisticated preventive system that incorporate leading edge technology. And you have mentioned the natural language processing, the machine learning, artificial intelligence, all the DLT blockchain stuff. So the current RegTech landscape is really an example of harnessing these innovations to ease the requirements of doing businesses and to ease the mission of the regulatory and authorities' mission. And with this rapid advances being made in workflow automation, the implementation of RegTech solutions promise to satisfy both entities, the regulatory authorities and the regulated firms. So I would like to share some insights about the region as you have mentioned, because lately we have, for instance, conducted a survey on the region with both financial markets participants, which are mainly commercial banks, and all the regulatory and authorities around the region. So really, we felt some barriers and challenges that are, let's say, common within the globe, and with particular points that we need highlight for the region. So initially, the regulatory authorities and the financial institutions across the board, they see great opportunities for adopting RegTech, SupTech to strengthen the compliance to regulatory requirements, enhancing the monitoring and supervision processes within a real-time valuation. And this is particularly has been approved, or they got this following the repercussions of COVID-19 and all the remote activities that we have witnessed in the financial sector, and even the emergence of decentralized finance models. And all of this really is coupled with the increase in cyber threats and exposure to financial crimes. So all the institutions, the regulatory authorities and the financial institutions really see the importance of and the great opportunities of adopting or embracing these RegTech and SupTech technologies. And based on this work and the very recent survey, let's start with this market participants feedback. So they see really that the RegTech providers still need to overcome obstacles in order for these solutions to reach their full potential and really to become a driver in the region. And maybe this vision is shared as well by both the regulated institutions and the supervisory authorities. So from the market participants' perspective, they see really the challenges mainly on the technological capabilities of the providers of the tools and solutions. They have great challenges with the integration of the new technologies with their legacy systems. They perceive as well this problem of the interoperability among the whole financial system between themselves as regulated institutions, whether the financial sector, non-banking financial sector, the insurance companies, and with the regulators on the same side. Also, they have highlighted the lack of mature solutions and the high need to the training and the availability of the necessary technical skills particularly in the field of the artificial intelligence, the big data, the deep learning, and all these stuff. What we have seen from both sides as well, that it's really important at this stage to have a clear regulatory guidance or a legislative framework for the market participants as a whole. So it's really needed. And one important element as well that really face the financial institution is that RegTech solutions are not perceived as revenue generating, or maybe they are so much cautious about this cost and benefit analysis when they select and implement the RegTech solutions. So for the solution providers, they need really strong cost saving or resource use case in order to be considered as vendor for both the regulated institutions and the supervisory authorities. Meanwhile, the regulated institutions and the regulatory authorities both are really overwhelmed with this process of selecting the correct vendors, the relevant RegTech or SupTech solutions. So, and both sides maybe are really cautious about renovating the existing processes to avoid any incorrect or not mature enough processes. If we shift to the regulatory authorities' perspectives, they have highlighted many particular barriers or challenges, which are really the budget constraints, the human capital and the skilled professionals and staff in the regulatory authorities, particularly when dealing with the solutions that are based on, again, the artificial intelligence, the deep learning, and all the stuff of governing the data model. So it's not an easy task for them. And really, they need to maybe have hiring new staff, go into deep education and learning process for their current staff, which is already a budget constraint for them. At the meantime, we have the lack of availability of mature solutions to be adopted in the supervisory authorities. The regulatory authorities as well also are really concerned, as the speakers mentioned, with the data challenges and the protection of client data and the consumer protection framework as a whole. And definitely this also coupled with the cyber resilience framework, because all of these solutions and to be integrated with the current legacy system and to have all the innovation and all the online scheme, we really need a strong cyber and resilient framework. But at all cases, the authorities really understand that they remain responsible for the functions performed by the RegTech providers. So they are really aware that can outsource the function, but they are still responsible for all the function performed. So this is why maybe they are a bit reluctant with this employing or embracing more SupTech into their solution, into their institutions. But at the same time, across the regions, many regulatory authorities, mainly central banks, capital market authorities, and the insurance authorities adopted many initiatives to really foster the RegTech, SupTech ecosystem. So we have many across the regions, wherever in the GCC states or the North African countries, they already applied the digital labs. And within their digital labs, there are particular labs for the RegTech and SupTech solutions. We have one of our central banks already adopting is SupTech strategies, and many others are already formulating the national strategy for RegTech adoption, which will be for embracing the RegTech, SupTech ecosystem across the financial sector within the homeland or within the country. Some others are enhanced the incorporation of RegTech, SupTech providers within their regulatory sandboxes, or even have this RegTech, SupTech accelerators and incubators, and try to do many initiatives to meet the investors within the accelerators and incubators program, with meeting them with the service providers. And because one of the major things that we need to nurture and to enhance it is the financing for the RegTech and SupTech service providers. Others, many across the region, have took the lead to bring the ecosystem together, the stakeholders together, whether under the leadership of the leading institutions, which is mainly the central bank, or having these many events, programs, and conferences, gathering as well all the ecosystem to foster a conducive and collaborative ecosystem for RegTech and SupTech stakeholders. In addition, we have seen that some regulatory authorities request from regulated financial institutions to employ RegTech solutions for compliance in some area of the financial activities, such as the insurance activity. So all these are really steps and initiatives took by the regulatory authorities to enhance and foster the RegTech and SupTech ecosystem within the national country. And we have a lot, these can be a future consideration to turn the challenges we have mentioned across the region into opportunities. So the education, if we would like to conclude or to point, the education and the cultural mind shift is really extremely important, because education is a key to enable and accelerate the culture mind shift within the regulatory and supervisory authorities, because it's really highlighted that we need this move in the mindset to have embracing within the supervisory authorities the SupTech solutions. Also, this passing from the manual oversight processes to automated ones have long been established, and the regulators' guidance and directions are key to encourage regulated firms to educate themselves on these new tools and solutions. So it's really important, the leading role of the regulatory authorities to guide them how to use it. By these initiatives or being a leading institution in this across the country, or even leading the initiatives of the incubators, accelerators, sandboxes, and all these stuff. And maybe gather them within this ecosystem under the supervision of these leading institutions. Also, one important point is the accountability to future-proof processing or processes. So we can do both side by side, a top-down approach to foster the innovation mindset, which is led by the regulatory authority, and as well a bottom-up approach focused on empowering employees to make a real organizational change to work better. And this is really important for both the regulatory authorities and the regulated financial firms. So by that, we can have side-by-side regulatory initiatives and the financial institutions to foster a proper adoption of RegTech, SupTech within the region or within the homeland country. Also providing the staff members with the tools and support to consider how they can future-proof their own roles along with the tasks they own is a means of activating the organizational talent in both type of institutions. Let's say as well, the clearly defined RegTech test is important, so that organization can be hesitant to implement new technologies into the core regulatory and supervisory processes. And this is really understandable because the perceived repercussions if something go wrong. So it's not an easy. However, these risks can be mitigated by undertaking clearly defined RegTech proof of concepts and drive these pilots within a strict scope. And maybe this will be the role of the regulator. Additionally, keeping the regulator informed of these developments within the national ecosystem from the early stage and follow up the development can really provide valuable insights and feed the circle from the service providers, the financial institutions, and the regulators, so that provide more opportunities for the whole industry and nurture the collaboration into the ecosystem. One last point is leveraging these open innovations. So regulatory requirements are published far and wide, which really allow for solutions with a proven track record to be widely adopted by the industry as a whole. But best practices can be shared proactively to allow for a pooling of resources to occur. So maybe we can have like a gradual approach to start by directing with best practices and then have some abiding directive as well, until we can reach a complete legislations or complete set of rules. So at the end, it's a collaborative, and we need an agile approach to really have this collaborative ecosystem and to have a proper RegTech and SupTech ecosystem in the national scene. So thank you.
Thank you, Dr. Nouran. I'm glad that you are raising the issue of having an adequate human resources who are skilled in the RegTech and SuperTech. So I think that's a very important thing, a very important lesson to learn. Now, last but not the least, it's my pleasure to invite Professor Volker Nunhaus, who is very well known in the industry, had a long association with Islamic finance, and now he was, although he was academic, but now he is consulting with IFSB. So I assume that maybe Professor Volker, maybe you could give us a perspective from a standard setting body point of view, that where you see that what are the development and challenges in this area. So please, over to you, Professor Volker.
Thank you very much, Mr. Chairman, and thank you also to the organizers for having me here. I'm afraid that I would be repeating many things that have already been said, also regarding the relevance obstacles of using RegTech and SupTech. I have prepared some slides, but as usual, being the last speaker, I think time is running short and most things have already been said. And I think we had some very good presentations today. And so I will skip to that, and I will just highlight a few things which I feel have not been covered adequately. And maybe I take the liberty as being an academic in that respect, not the consultant of IFSB, because there is so much already been said about IFSB and its role, that I come up with something that may look a little bit esoteric if you look at it at the state of RegTech right now. But having listened to Dr. Bashir, I think it is very important to point out, let's say, things that might become even more relevant for Sharia scholars and for Islamic RegTech and Islamic FinTech in the future. So I will try to rush through one slide that I have, and I will try to share my screen. I don't know whether that has been successful or not. See, yeah, there it is. No, it's gone.
Actually, Professor Volker, we're trying to see if we can put the slide. It's up now. We can see it.
It's up
but
now.
I would just want to let you know that since we started late, we can take a bit more time. So please go ahead and convey whatever you wanted to do. Thank you so much.
Okay, thank you. Well, first of all, there is a debate whether RegTech is part of FinTech or not. And in my understanding, there is one very important difference between FinTech and RegTech. FinTech is the application of technologies, and I've listed some of them on the top: blockchain, big data analytics, machine learning, and so on, to disrupt financial institutions, to come up with new institutional solutions, to come up with new financial products. While RegTech is not really disrupting financial institutions, but it is disrupting legacy technologies. That means technologies that are applied presently to meet the regulatory requirements. Probably you cannot earn that much money from disrupting legacy technologies than from inventing new financial products, because the number of RegTech companies, individual companies, is relatively small. And funnily, 2 empirical studies found out that RegTech, let's say advanced technologies in RegTech, are not yet implemented that widely as you would assume, reading all the stories about RegTech, what it can do, how beautiful it is, and how many perspectives there are. So I'm referring here to 2 studies, one dealing with the European financial sector. It was done by the European Banking Association, and the other one with the UK. So 2 of the relatively advanced countries where RegTech should be applied, but seemingly at least RegTech providers are not that many, and Islamic RegTech providers seemingly I haven't found any. Maybe there is nothing Islamic in RegTech, and that's a very important point, because I think Sharia supervision and Sharia compliance are very important, and Dr. Bashir has outlined in a beautiful way where it is all relevant. Now, rushing through this slide here, I mean, it just mentions where RegTech for the time being is applied. It is in particular in AML and fraud prevention. That is more than 50 to 60% of the use cases. Then it is also used for prudential reporting. And of course, I could imagine something like Sharia reporting, where many of the elements could be used. ICT security to a less degree, and something which is still less relevant, that is credit-worthy assessment. However, I put it in italics because I think this is a quite important example for where things could go to. The use from a financial institutions perspective view is for data transfer programs for cloud computing. There you find RegTech solutions, and in particular also for predictive analysis and machine learning in the context of risk management. So on the left you have the most important RegTech segments, on the right you have the most commonly used technologies. The first one, data transfer protocols and cloud computing. Well, that's not so exciting because you are using now digital transfer protocols. It's a bit technical work to do, and cloud computing means you don't need your own hardware, but you can go for, let's say, computing as a service. But when it comes to predictive analytics and machine learning, I think we get closer to the heart of what FinTech might be and how RegTech could influence FinTech or create a link between FinTech and maybe also Sharia compliance. And I think that is the point that I would like to make. And therefore, here on the second slide, you just see the, let's say, the benefits from the perspective of a financial institution, compliance with regulatory standards, supporting risk management, combating financial crimes. And then there are some individual points. I don't want to go into that. Only important thing is here enhanced risk management tools and possibly also real-time monitoring and sampling. This has already been mentioned in this panel, so I don't have to cover that. There are a lot of obstacles, and that may explain why RegTech is not yet that widely used. The IFS, the financial institutions perspective, is that there are still some problems with data availability, quality, privacy, integration with legacy systems, and of course cyber security systems. The interoperability and integration with old systems is a problem. And many also have responded because the empirical studies quoted at the bottom are based on surveys, changing regulations. So the regulatory framework is evolving continuously. From a RegTech provider's perspective, there are also some kinds of obstacles. And one thing is they feel that there is a lack of standardized regulatory requirements and guidance, and in particular, a lack of tech-embracing stances of regulators. So regulators should encourage the use of RegTech solutions. Okay, seemingly they are doing this, at least in the case studies that we have heard about here in this summit. From a regulator's perspective, I just want to mention the problem of assessing the effectiveness and reliability of RegTech solutions that are applied by financial institutions. That is not an easy task, in particular not if it comes to more advanced technologies. There may be a lack of skills and tools for auditing of algorithms, for example. And then there is this tech neutrality. Many regulators emphasize that they are technologically neutral, and so they are happy with legacy solutions and they are happy with RegTech solutions as long as they get their data as fast and as reliable as they need it. So tech neutrality may not be it may be an obstacle to meet the expectations of the RegTech providers. And then there is something that I would call ethical finance. And let me jump to this because that's where Sharia comes into play. Yesterday, we had a discussion about cryptocurrencies, and it was also mentioned today. And I think there is a traditional, let's say, a traditional understanding that the digital technologies are neutral tools. Technology is technology, so there is no Sharia issue in the technology. It depends on the intention of users. What do you do with this beautiful new crowdfunding platform, for example? And depending on the intentions, Sharia relevance comes in. In a sense, it is a product orientation. The product of technology is what may cause Sharia concerns depending on the intentions of the user. But maybe it becomes a bit more complicated. And I would like to draw your attention from product orientation regarding Sharia relevance to production process orientation. It may be that there are technologies with an inherent ethical component and a Sharia relevance. And I would like to use this creditworthiness assessment and machine learning as an example to illustrate what I mean. First of all, let me put it this way. Digital technologies are data-driven. And what are data? You don't find data on the street. They are concepts, mental concepts. They are abstractions of reality. So the first, if you like, important question is, what do we include and what do we leave out? What part of reality are we ignoring? So what kinds of data can we include into our advanced tools? Well, at least in Europe, we have a general data protection regulation. And in that, you find that there are some prohibited data that you must not use in so-called life-altering decisions. For example, deciding on whether you grant finance or not, employment, health, you must not use information about race, ethnic origin, political opinions, religious beliefs, and so on. So you must not use this. So if you're asking a person in a in a loan application about their racial background or ethnic origin, that is prohibited. So you are violating a very relatively strict regulation or law, national law. There is a totally different approach, that is the big data approach. And the big data, there are two slogans, quite nice. Data is the new oil, and all data is credit. So abstraction of reality, well, whatever data you can get, put it in a big box and then try to cook something out of that. And then you have, you process all the data that you have collected. Now, the first insight is that by using all data that you can collect, for example, data from social media, data from your navigation system, from your mobile phone location data, so profiles where you have been, whom you have met, with whom you are talking, what holiday, what holidays you have had, what are, let's say, your shopping habits, and so on. If that is all in big data, then you're creating profiles of people where most probably you create proxies, data proxies for prohibited data, intended intentionally or unintentionally. So because if everything is collected about people, except in a questionnaire for a loan application, what is prohibited, you still have proxies for what is of these prohibited data. So that is the first problem. It is not covered by privacy and data protection regulations or laws because you are not asking directly the people. It is only covered by laws if the laws have a very broad interpretation, wide interpretation of personal data, as for example the GDPR, the European law, tries to formulate. So in the case of the European law, probably proxies would also be prohibited. But in many other countries where you don't have these laws, and we have learned that there are a number of even also Muslim countries where we do not yet have privacy laws, and depending how strict or restricted they are, you may have these proxy problems. And this, in a sense, is a problem with, I think, Sharia relevance. Should you really use such proxies in, for example, a model for deciding on a loan, on a financing, or deciding on how much someone has to pay for a takaful cover, or whether a takaful cover is given or not, is given or not. So now the next problem comes that using these data in models, for example, machine learning models, we have the most advanced and effective models, which unfortunately, that's a technical term, are based on nonlinear and non-monotonic response functions. That means you don't know if input data change in one direction, whether the output of the model is changing in the same direction, proportionate or not, or in a totally different direction. So you cannot predict from a change of individual input data what will be the reaction of the model. And things become even more complicated if you are using self-adjusting models, if we would be talking about things like not only machine learning, but neural networks and other things, because they continuously modifying the response functions to get ever and ever better fits to what the users would like to receive, what output they would like to receive from these models. And so that creates a serious problem, I would say, because life-altering decisions like on finance, takaful, they could be biased, because if you have a bias in the input data, you will have a bias in the output data. How do you correct that? Very often it's very hard to identify these biases, and if you are a regulator, you should have outcomes of a model, let's say a creditworthiness assessment model, that does not use these data, but other data maybe as a kind of a reference. But then you are doing work twice, and that probably is not very efficient. So what technologies can you use for finding out biases in machine-generated decisions? They also made, if they are really creating, let's say, different groups, and if they are maybe not on an individual level, but on group levels, use a kind of quasi-prohibited data then this may also violate fairness criteria. And bias and fairness criteria are ethical issues, and I think that should somehow be of interest for Sharia scholars. And the final point is that these models produce an output. They tell you whether you should provide takaful cover at what rate, and they allow price differentiation, or you can say price discrimination. However, or if in the worst case, if something is denied, what are the reasons why the model has denied takaful cover or a loan? You can't find out because it is a real black box. It is a self-learning, self-adjusting black box, and it is not interpretable by those who are using this black box. And that is a very, very big problem. And the tools can, in that sense, be inherently ethical or unethical, even with good intentions of the user. So if we see a problem here in these very advanced instruments, which are also applied in RegTech, which are also applied in FinTech, and which are probably the next generation of instruments, then we should maybe take a closer look at the calls for what is called an ethical AI. The EU has been calling for this, the OECD has been calling for this. And I think the Sharia scholars should also take this very seriously, because it is the production process that has Sharia relevance, not only the outcome, the production process. So maybe it might be a good idea to create an institution that could enhance the technological knowledge of Sharia scholars, or create a specialized advisory structure, maybe provided by IFSB plus AOFI plus ISDB, because I think these institutions are focusing on and are dealing with some Sharia issues in the world of FinTech, and they might create a little bit more, let's say, sensitivity amongst regulators, but maybe also amongst the industry. Let me close with one quote, which I found a bit, let's say, concerning. There is the Islamic Financial News published in Malaysia, and they issue a financial innovation report every year. And in the last one, which was, I think it came out in July, there is one sentence that I would like to quote. Despite more than 2/3 of respondents having secured a fatwa for their business, respondents were fintech companies, about 55% of respondents view official Sharia pronouncement as unnecessary to their business, and that I think is quite astonishing. So there seems to be a practice of Sharia light in the industry, but on the other hand, if you look at the Sharia standard, the governance standard for Islamic crowdfunding issued by AOFI, or an exposure draft, there they require Sharia boards, and they require a lifetime monitoring of financed projects so that everything remains Sharia compliant. So these are the extremes, I would say, for the time being, and something in between might help to enhance the knowledge and the awareness of problems and issues that may be not yet relevant in Islamic RegTech, Islamic FinTech, because it's so small, but it could become relevant, and is already relevant in conventional finance. So I think that's my point that I could add to what has already been said. Thank you very much.
Thank you very much, Professor Volker. I think I quite a bit takeaways. Especially I liked your quotation, the data is new oil. And I also saw that you have emphasized on ethical artificial intelligence. I think these are the new topics which I think everyone was very keen to learn more about it, but unfortunately we do not have much time. We have some time left for a couple of questions from the floor. So if we have kindly, we have one question from Brother Samar from State Bank of Pakistan. Please, and anyone who's asking a question, I request them to introduce yourself and then ask the question and comment and if it is directed towards a particular speaker. Please go ahead, Brother Samar.
Thank you, Dr. Zamir. Just one observation and one question. Quick. Observation is that still I'm finding difficulty, you see, in understanding as to what is an Islamic RegTech and an Islamic SubTech. If an institution is you see employing a RegTech, is it called Islamic RegTech? So the relevance of what I was expecting from the panel was to tell us the inherent benefits, advantages, and disadvantages of Islamic RegTech and SubTech. So that's an observation. My question is from Dr. Bashir. Excellent, presentation. The question is that you mentioned about redistribution of wealth. When we look at the jurisdiction across the world, actually it's other way around. When we look at the redistribution of wealth, what we find is that the savers are getting less. In financing, the lenders, the financing providers are getting more. So against Maqasid Sharia, don't you think that this is the faith exploitation? Thank you.
Thank you. Let's get all the questions. Is there any other question from the floor? Yes, we have one gentleman over there. Please introduce yourself and ask the question. This side, please. Right over there. Oh, sorry, I don't see you over there. I'm sorry. Next time. After this, please. Sorry, I don't see your hand. This gentleman was before.
Thank you very much for this discussion. It's really very important session. The introduction that has been mentioned by Dr. Bashir regarding data and innovation, and I believe what has to be done there is to think about intelligent data and small data and not to go bigger and bigger with data. With respect to what the professor has introduced regarding the machine learning and modeling, I think we have to stop at this point. There is serious issues related to modeling and not just related to the data and the algorithm being implemented, but at the design itself and what has to be done over there. And also, inside the model, there is so many things that are unpredictable. We do agree with him. And we have to understand exactly what has to come out of this model and how to associate it with Islamic principles in order for us to have a financial Islamic modeling that will guarantee the whatever objectives we need to accomplish. Thank you very much.
Thank you so much. Could we get back to the brother over here, the right-hand side, please?
السلام عليكم ورحمة الله وبركاته.
وعليكم السلام.
أنا أحاول أتكلم باللغة العربية في هذا السؤال. إحنا الآن في قمة مجلس الخدمات المالية الإسلامية الخامس عشر. كم كنت أتمنى
I really hope that we would have an Islamic currency that will be circulated in all the Islamic countries and to have the same power that the other countries have, since we are here in this summit for 15 years holding those summits. So we were hoping that the results of the conclusions of this summit will lead to having this very strong currency.
I don't know, Dr. Bashir, if you can translate the question. But let's take the three questions. One, I think one was directed towards you specific. But I think it's a very valid question asked that, what do you mean by Islamic RegTech? So I don't know who would like to take this question. Anyone, any volunteers that who would like to take? What is the RegTech? I mean, we know the RegTech, but what is Islamic RegTech? Anyone from the panelists? Dr. Noorun, would you be willing to address that question? Anyone?
Let me
please
attempt.
go ahead. Dr. Bashir, please go ahead.
Yeah, I think the essence of RegTech is the deployment of technology for regulatory purposes. And as we know that Islamic financial institutions are subject to certain regulatory standards that are common with conventionals, but they have got some specifics that need to be considered in their regulation, especially as regards to Sharia compliance and the treatment of category of depositors that exist in these institutions which do not exist in the conventional institutions. So when you talk of an Islamic RegTech, it's the same RegTech that is deployed for the regulation of financial institutions, but added to it the specificities of the Islamic financial institutions. This is my understanding of the Islamic RegTech, and the same also with the SUPTech, the supervisory, the deployment of technology in the supervision of these financial institutions. Some people do make the distinction between SUPTech and RegTech to be depending on the entity that is the subject of the either regulation or the supervision. So they regard SUPTech to be from the vantage point of the regulated entity, of the supervised entities, and RegTech from the vantage point of the regulating entity. So for both of them, the only thing regarding the Islamic antonym that is mentioned before them is to the Islamic prefix that is mentioned is to address the specificities of Islamic finance, central of which is compliance to the Sharia. Thank you.
Thank you. And Professor Volker, I think there was a question about the machine learning and the design of the modeling. Would you like to address that question?
Well, I think it was more like a comment. I totally agree that there are much more issues than I have just mentioned. I try to pick just one aspect or two aspects, and I think I basically agree with the direction in which the comment was made. So I'm fine with that.
Thank you. And Dr. Bashir, the question which was asked in Arabic, because I couldn't understand, would you please kindly address that?
Okay, thank you, Doctor. The question in Arabic was we are in the 15th IFSB Summit now, and it is high time that after going through this period of time, that shouldn't there be the creation of an Islamic currency after the Islamic finance has gone through this journey to the level of having a summit for the 15th time. Isn't it high time that we had an Islamic currency? Well, this is a question which is general. In my opinion, the creation of a currency, as we've seen with the cryptocurrency, is something of a business decision. It's not something which it's not a consultative decision. We know definitely central banks are creating digital currencies in response to the cryptocurrencies that we have in order not to be made irrelevant. But as a suggestion, I think it is a very good decision, but that will be something who will be with a body like the IFSB be the champion to do that, or do we leave it to a business decision, which is actually what is happening, because nobody is facilitating or taking the initiative of creating the cryptocurrencies that we see. There are individual efforts, startups, and they just start and they create it, and then it gets acceptability. Maybe we have an innovative way of creating an Islamic currency that will embed the effort of business operators as well as regulators. And then, if you allow me, Dr. Zamir, Mr. Chairman, the question raised by one of the speakers one of the participants regarding the redistribution of wealth, which I made reference to. Certainly, redistribution of wealth is one of the fundamental objectives of the Sharia regarding protection of wealth. As Allah has said, so that wealth does not remain concentrated in the hands of a few. And when we look at what we have of fintech, definitely a great challenge will be the challenge of wealth redistribution. When we look at blockchain technology, the amount of electric power that is needed definitely puts the countries that are backward in terms of energy at a disadvantage. And that is why we have even the opportunities that are there for startups in these economies. They are mostly filled by venture capitalists from the developed economies. I mean, all the startups in Africa that had reached unicorn level, they did attain that level because of inflow of foreign direct investment from the developed economies. As far as Islamic finance is concerned, our scholars and our practitioners and our academicians, they are constantly hammering on the importance of Islamic social finance as the greatest tool to achieve wealth redistribution. And I think this is very realistic and this is achievable. It could be embraced by businesses, it could be embraced by governments, but in terms of the actual redistribution at a global scale, this is something that should be the responsibility of supranational institutions and multilateral institutions to reduce the gap between the advanced and the emerging economies. Yes, thank you.
Thank you. Thank you so much, Dr. Bashir. So we know that we are probably preventing you from taking a break for lunch, but thank you so much, everyone. I'm sorry, maybe very quick question because we are told that we are running out of time. Very quick question, please. Introduce yourself and then ask the question. Brother over there, please, can you, somebody give the microphone to the person? Do we have, please? Otherwise, if it can wait, then we could, you can take the question with bilaterally on one of the, please, right over there, please. Please introduce yourself and then ask a question.
Thank you. My name is Saad Al-Jal'oud. Thank you very much for all speakers today. My question, why is gap still between Islamic finance theory and Islamic finance practical?
Okay. I think that question, you need a full couple of days and weeks to discuss that why the difference, divergence between the theory and practice. Probably, I think we are really running out of time. But I would suggest, please, there are all the experts in the audience with many very successful practitioners as well. I suggest that you take that question with them individually. But with that, I would like to conclude the session. Thank you very much for your patience and attending. A very learning experience for myself to look at the perspective from a regulator, from a standard setter, from a Sharia perspective, and from an MDB's perspective as well. So I take this opportunity to thank all my panelists. Thank you so much. Thank you, Dr. Nurand, and thank you, Professor Volker. We wish you were here, but anyway, thank you so much for participation. So we conclude the session. Thank you very much.
Thank you, our valued speakers. شكرا جزيلا للمحدثين. إذا نتوجه الآن الاستراحة لأداء صلاة الظهر وتناول وجبة الغداء. يؤسفنا حقيقة أن تكون هذه الاستراحة لمدة 45 دقيقة فقط خلافا للجدول. نأمل منكم الالتزام بالعودة هنا في تمام الساعة 1:30. We're having a break now for prayers and lunch. Please be back here at 1:30. Please accept our apologies for shortening this break. as we are behind time. So please be here at 1:30. Thank you indeed.
Thank you.
السيدات والسادة الكرام خارج هذه القاعة، نأمل منكم الانضمام إلينا إذ أننا سنبدأ بعد لحظات من الآن. Ladies and gentlemen, we're starting momentarily. Please join us here at the main hall. السيدات والسادة الكرام، أعتذر عن هذا التأخير، وبإمكاننا البدء الآن مع الجلسة السادسة من جلسات هذه القمة التي تأتي بعنوان الاستفادة من التقنية في الخدمات المالية الإسلامية لتحسين الشمول المالي، حيث بات الابتكار الرقمي والحلول التقنية بوابة الوصول الأولى لخدمات مالية إسلامية جاذبة للأفراد والمنشآت على حد سواء، والقيام بدور محوري نحو الشمول المالي. ويدير هذه الجلسة مشكورا سعادة الدكتور سامي السويلم.
Dr. Sami Swelem,
فليتفضل مشكورا.
if he may come to the stage, please.
بسم الله الرحمن الرحيم. الحمد لله والصلاة والسلام على رسول الله وعلى آله وصحبه وله. Welcome back after the lunch break. That's not the best session during the summit, but I hope you got enough caffeine after the lunch to keep you awake. We'll try to insert some jokes here and there to keep you awake during the discussion. So not to take too much of your time, let me invite our distinguished panelist, Mr. Saud Al-Busaidi, Central Bank of Oman. تفضل. And we have Dr. Amir Rahman, who I think will join virtually. Is that true, Brother Barakat? And we have Francisco Di Salvo, which I think also will be joining virtually. And we have Mr. Nick Cameron, who will be physically with us. Nick, are you there? Tfaddal. Okay, here is Amir and here is Francisco. How are you? How's everything? Good, very good.
Good morning, all good, thanks.
Very well, good to see you, Dr. Sami.
Good to see you, Brother Amir. Okay, so this session is about harnessing technology in Islamic financial services to improve financial inclusion. Did Islamic financial institutions improve their inclusion through the use and application of their digital financial technologies? Yes or no? Why and why not? So let me start first with our first panelist, Brother Saud Al-Busaidi. He is the manager of Islamic Banking Department at the Central Bank of Oman. He holds an MBA in International Bank and Finance from the University of Birmingham, UK. He joined the Central Bank of Oman in 1993 at the Banking Development Department. He started his career as an assistant examiner in the money exchange section for 6 years and in charge of commercial banking section for 10 years. Saud is the deputy chairman of the IFSB Technical Committee, and he is a board member of the IOFI Accounting Board. Brother Busaidi, تفضل.
هنا ولا هناك البوديوم؟
زي ما تحب.
طيب. بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف المرسلين سيدنا محمد وعلى آله وصحبه وسلم أجمعين. Thank you, Dr. Sami, and thank you for the IFSB SAMA for this invitation for me to be part of this discussion panel. Being a regulator, so my area is to make sure that what is the role of Central Bank of Oman in terms of improving financial inclusion in the banking sector, with the focus, of course, on the Islamic banking. These are my agenda for today's session, financial finance and financial inclusion. The second is the role of Oman Islamic banking entities in expanding the outreach of financial services. What is the Oman ecosystem for supporting digital transformation and expanding access to finance to the undeserved, all and SMEs? Strategy for Islamic banking sector that we are working on it as a roadmap for the future. And what are my thoughts for going forward? I'm not going to talk about the definition of financial inclusion that is quite all known to everybody, but I want to share some commonalities between the financial inclusion and Islamic finance objective. Justice, the first one is justice, transparency, and equality form the foundation of Islamic economic system with the objective of developing prosperous economic and social system. The second common area, Islamic economies gives just weight to both individual and social interest, and hence encourages social harmony. Third is the Islamic financial system endorsement of justice and risk sharing provides for the establishment of a clear link between the Islamic concept of development and the notion of financial inclusion. For example, common goal of enabling the development of marginalized individual and communities. Islamic financial contract, particularly risk sharing, financing instruments, and social solidarity instruments such as sadaqah, waqf, qard, can be utilized for financial inclusion. These instruments are intended specifically to safeguard the rights of the less through the income and wealth of the more able thus ensuring social protection and poverty alleviation. What is the role of our IBEs, that is Islamic banking entities, in terms of financial inclusion? The objective of licensing Islamic banks and windows in Oman, basically two main objectives, is to offer an additional option to the people to meet their financial services needs and to expand the outreach of the banking services, that where it comes, financial inclusion. We have made the central bank, the legal and enabling regulatory environment for Islamic banking. Islamic banking in Oman started in 2013. It's almost now 9 years, and we have, of course, prepared the foundation in terms of the right regulatory framework through, amendments in the banking law, robust Sharia governance framework, and we have the high Sharia supervisory authority within the Central Bank of Oman, the IBRF, that is Islamic Banking Regulatory Framework. That there are many issuance of Oman and U.S. sovereign sukuk, and of course, being Islamic banking, we have to deal and address the task issue in terms of, Islamic financial services. These are the milestones, perhaps, that what I want to focus is on the left chart. As you can see, Oman is the market share of Islamic banking, though it is, still, short age, but we have already, as of December 2020, Islamic banking market share is 14.3, and according to the latest figure in June 2021, it has already crossed 15%. So that makes the Islamic banking sector in Oman systematically important. And with that also market share, 15%, we have become the 15th largest Islamic banking market. These are the, the contribution in enhancing the access to finance, 2 Islamic banks, 5 windows, and they are all split over the Sultanate, be it through branches, on-site banking facility, mobile banking, ATMs and CDMs, interactive machines, banking kiosk, web and phone banking, and mobile banking. What is the eco system of financial inclusion? These are the initiatives that have been taken and in the process by the Central Bank of Oman in terms of promoting digital transformation and technology, ease and simplify regulation for fintech companies and provision of payment services, issuing payment system regulation that was in 2019 based on a new national payment system law of 2018, constituted within the Central Bank Fintech Committee with clear and wide mandate, announced Fintech Regulatory Sandbox Framework. Currently, we are drafting Fintech Framework and Roadmap, finalizing the Open Banking API strategy, and drafting regulatory framework for availing cloud services by licensed institutions. We also working on establishment of national eKYC and contemplating on a proposal to establish Fintech Innovation Hub to support local talent and innovations by establishing incubation centers and announcing acceleration programs. Financial inclusion framework, the framework that has been followed by the Central Bank of Oman, and basically I will focus on what is the policy objectives, the supportive regulatory framework, and the features of financial inclusion policy. The objectives of the financial inclusion framework that is issued by Central Bank is for inclusive growth, financial inclusion and social cohesion, support economic diversification, and greater participation in economic activities. The supportive regulatory framework, these objectives should be implemented through better payment system channels, liberalization of branch licensing, branch opening emphasis in remote areas, emphasis on SME finance, no frills bank account, facilitation of people with special needs, and of course, fee waivers for low salary pensioners. The features of the financial inclusion policy is to basically create awareness of product availability, take initiatives from financial literacy creation, apply fair and reasonable charges for providing services in selected groups, enable and empower front office staff, and launching public campaigns to make sure that the awareness in the community. These are other than the Central Bank of Oman initiatives that is within the financial inclusion, the SME Development Authority. I will not go through into details. There is Sharaka, okay, and there is the SME Development Fund as well. On micro and small and medium enterprises, we have giving them due attention in Oman, and a number of guidelines and regulations being issued in this regard. And basically the policy of these and the objectives of these are to promote growth, support diversification of the economy, generate employment, channelize funds to the priority sectors. And these are the initiatives that we have provided for the SMEs development. We ask banks to allocate minimum 5% of the total financing to SME sector, apply low profit rates, and reduce other charges. That's where the SMEs always complain. Establish a dedicated SME department headed by the senior management, staff, AGM and above. Extend relevant training and awareness of the staff relating to SME needs. Institute a well-defined approval process with adequate delegation. Ensure availability of working capital and timely credit flow and at the initial financing. Provide training, coaching, and all and guiding opportunities to the SMEs. These are the initiatives, basically the last two initiatives, that is through the pandemic, where we provided some more relaxations for the SMEs. We are working on a strategy. I will skip these, and these are the main feature of the strategy, Islamic banking strategy. But I want to stress three issues here that will include in the strategy. Introduce strategies for the integration of IBs with ECG principles and demonstrate sector sustainability. Build a framework for integrating social finance with IBs operations to enhance social and financial inclusion, and invest in the offering advanced internet and mobile technology. These are the going forward. These are my concluding remarks in my presentation. There is a need to enhancing risk sharing in instruments in Islamic finance. There is a need for integration of Islamic social finance instruments. Regulators need to support, that is very important, need to support technological transformation and rising collaboration, that collaboration between the fintech firms and commercial banks. With that, I conclude my presentation. Thank you.
Thank you, Brother Saud. You raised many important questions. We will keep this in the second round. So let me now invite Dr. Is it Amir or Amir? Amir, I think.
Yes.
Okay. Dr. Amir Abdulrahman is a partner at the U.S. Princeton Stone House Capital, a strategic investment firm based in New Jersey. He is also an advisor at Dubai's Fajr Capital, and he is also a senior advisor to the United Nations Development Program and a consultant to the World Bank Group's Finance and Market Global Practice. He is a senior fellow at the Richard Paul Richman Center for Business, Law, and Public Policy at Columbia University. He contributed to the center's focus on investors' ESG considerations and public aspects of private investment. He holds a bachelor's degree from Harvard College, a master's degree from Harvard Graduate School of Arts and Sciences, an MBA from Harvard Business School, and a Doctor of Education degree from Columbia University. Dr. Amir, the floor is yours. 9 minutes is okay?
Perfect. Thank you so much, Dr. Sami and esteemed colleagues, IFSB and SAMA, for hosting this very important session. And I will share some perspective, mainly from a UNDP, United Nations Development Program perspective on sustainable finance. and digital finance, and how the rise of digitization helps with sustainable financing, or can potentially help. And then I will also apply that to the Islamic finance sector as we go along. So what I will do is I'll share with you very briefly these 5 opportunities that have been identified by UNDP and by our colleagues in the United Nations as we've witnessed the digitization of finance, especially being accelerated through the COVID pandemic. And there, while of course a lot of difficulty and tragedy in this pandemic, there also are certain lessons that we see, or things we learn in terms of what is possible in the realm of digital finance. And as we emerge from this pandemic, the idea is how we can harness this digital momentum to continue the positive trends, and of course correct where there are challenges and issues that need remedy. So the first theme that we've seen is from the digitization opportunity is the idea of aligning pools of capital through capital markets with the SDGs. So the capital market alignment piece has been in fact accelerated by this digitization. And one example I would give from the Islamic finance world is the work that UNDP has done in Indonesia on the Green Sukuk program. And there, the original tranche of the Green Sukuk was institutional capital, largely from Europe and North America, as well as, of course, Southeast Asia and the Middle East. And as that program has moved forward, there's been a retail component, and the retail distribution has been largely digital. And so it's been great to see how digital distribution of green sukuk, sustainable sukuk, of course, ethically aligned products is a great opportunity. So the idea that people can access these sustainable issuances much more easily through digital platforms is something that we find exciting. So that's the first, the idea of access to capital markets through these digital platforms. The second is a very important point as we progress as societies, and that is the accountability of public finances and the idea that digital finance allows for greater transparency, reporting, and accountability. And if we apply this to the Islamic finance sector, then one area where this applies is the zakat collection practices. And we've seen some very good trends. I'll cite one example would be in the UAE, where there's been very good reporting of how zakat is collected, where it's being used, and how it is meeting the end goals of the giver. And that's something we find very exciting. And similarly, again, back to Indonesia for another example, Basnas, their national zakat collection agency, has committed to aligning all of its projects with the SDGs, and they use technology, particularly mobile technology, to really make, to collect the data regarding the impact and then to report that out. So we're very excited about that. So the second piece is the accountability element. The third is what we're calling channeling digitally aggregated domestic savings into long-term development finance. So domestic savings is, of course, a hugely important objective for many member countries, and the idea of promoting the degree to which households save and prepare for retirement. And we feel that the digitization of finance makes it even easier for micro savings, for micro investments, for micro accounts to be built and collected. And that is hugely important also for Islamic finance. I mean, when we look more generally at examples of collecting and mobilizing domestic savings, one which reminds us, way back from the 1960s, is the rise of Tabung Haji in Malaysia, Lembaga Tabung Haji, the Hajj Fund, which was very much retail focused and mobilizing domestic savings in Malaysia. And of course, now with digitization, it's a lot easier to accelerate that. So ideas like a Tabung Haji, which help people save, in that case for Hajj and Umrah, but also can be used for savings more broadly for retirement, that's a wonderful thing. So the idea of using digitization to promote micro savings for the domestic economy. And two more trends, and then I'll turn it over to the colleagues for the additional comments from our esteemed panelists. So the fourth trend is informing citizens on spending and linking spending with the SDGs. And this is a trend that we've seen globally, but particularly, more in Europe and North America now. And we do expect that this will spread globally, and would love to hear from colleagues about what they're seeing here. But the idea of more attention to consumption, more concern about sustainability and how products are produced. And that's a great example where the ESG lens really gets broader, because many of us think about environmental concerns primarily, but also, of course, the social concerns that go into that in terms of the labor practices, in terms of the wages that are paid, in terms of the transparency of the governance of the companies. All those things can feed into how consumers look at products. So we think that this is a more nascent trend, but the idea of digitization will help consumers be more conscious in thinking about how their products are sourced. And that will be a good thing for SDG awareness and for SDG in fulfillment. And finally, the theme we highlight is accelerating the lifeblood financing for employment and income generating world of SMEs. And we heard from the Central Bank of Oman, and of course, this is a common and very important shared concern, is how do we get financing to SMEs? And one thing that the digitization helps is, as was mentioned by Dr. Busaidi earlier regarding the initiatives in Oman, we can certainly help banks and financial institutions reach out to more individuals through digital finance. And we can expand the footprint. So places that have otherwise been hard to serve become accessible through digitization. I would also highlight that this can be a big enabler, and has been a big enabler for non-banking financial institutions. And often the challenges that we hear, and I'm sure our colleagues from central banks will have seen this, that when banks are pushed to finance SMEs, their response is that the credit is too risky, the challenges in terms of collecting information are there, and the cost of the branch network make it very difficult. And these are all fair concerns. But when we look at NBFIs, they can have a lower cost base, they can be more efficient in collecting that information. And in fact, in the pre-summit activities, there was an excellent session, very encouraging to see Saudi fintech companies that are targeting SMEs and finding ways to be efficient and cost effective, because it may not always be the banks that are the solution, but rather other platforms that can be more focused on SMEs and get them the financing. So with that, Chairman, I'll turn it back over to the panel and say that we see the rise of digitization as being very helpful for more sustainable forms of finance, and of course also for Islamic finance, which may be serving segments of the population that are either harder to reach or somewhat fragmented, and digitization makes it a lot easier to get to them. So with that, sir, I'll turn it over to our panelists. Look forward to the discussion.
Thank you, Amir. You are now in the US or where?
I am indeed. I am in
What
the
time
US.
is it? What time is it?
6:06 a.m.
What time is the Fajr?
Fajr came in at 5:20-ish. And so yes, it's well into the Fajr time.
All right. Thank you very much for waking early for us.
My pleasure, sir.
Okay, so again, Dr. Amr here is very, very important questions, and we will keep these questions for the second round. I'm glad now to introduce Francisco Di Salvo. Did I pronounce it correctly, Francisco?
Yes, thank you a lot, Dr. Sami. And good morning, everyone.
Good morning. So let me introduce your good self. Francisco is a senior financial sector specialist at the World Bank's Payment System Development Group. He joined the World Bank in 2020. He performs technical assistance to governments and central banks. The assistance is aimed to support policy reforms and implementations on a series of thematic areas related to financial systems. Previously, Francisco held several roles within MasterCard, the last being Director of Product Management for the Data and Services Unit. So probably he has some free card to some of the audience. Is that true, Francisco?
Not yet, but we have ideas on how to build systems that can then use cards, of course.
He also served for 3 years as a market infrastructure expert at the European Central Bank. Francisco, you are in Washington, or where are you now?
I am in Germany, in Frankfurt, as I moved here when I work at the ECB, and then I base my life here in Germany at the moment. But I will relocate to Belgium soon.
You are very welcome. The floor is yours, Francisco. 9 minutes is okay?
Perfect. Many thanks for inviting me here today. It's an honor to speak at the 15th IFSB Summit. I have to state that my remarks will reflect my own opinions and not those of the World Bank, its senior management, executive directors, or shareholder nations. It's important for me today, as the panel was meant to address opportunities and potential strategy to facilitate innovation and adoption of digital finance and financial technology, to start to view this with an angle from financial inclusion and a technological angle, which I find them more close also to the role of the World Bank to end poverty and to promote prosperity, and as well more close to my background that is coming also from the technological point of view. I think a key element of the historical moment that we are witnessing in the financial sector is as we heard in all the panels before, is the increasing adoption of technology that creates per se affordable and convenient access to financial services by decreasing the marginal cost for performing tasks and operation, and by automating a lot of the operations that were previously performed manually. And this, let's say, increased the speed, the lower cost, and also possibility to have increased security and transparency in organizing the operation is the key element that technology, I believe, is bringing in this historical moment to the financial services. And among the financial services and the products and the solutions that are marketed, we believe at the bank that transactional account is a key basic financial product that allow to reach financial inclusion, to reach the people, providing them an opportunity to send and receive efficiently funds, and also to store them safely. I think that this is really the gateway for opening additional services that could be in the saving space, in the insurance, or in the borrowing. Technology, in this case, it's a key to overcome barriers, both in the supply side, where often high operating cost, limited competition are blocking the development of the market and the accessibility of the market to the poor. And on the demand side, there are other elements that also hamper the inclusivity of the financial system, like the lack of an identity system, lack of trust and formality that the financial sector has vis-à-vis the consumers. Not to mention, finally, the geographical barriers, as the distribution of population is often uneven among territory, and the financial sector is not covering all the access points, as it's not convenient to have access point everywhere. In this sense, the bank has created let's say, a model to approach at the development, and there are three key areas where we work providing technical assistance in countries, and we believe that these three areas should be all present in order to achieve the presence of a market condition, and then allow the development of financial services. The first is a conducive legal and regulatory framework. The second is infrastructures that allow the opportunity for the consumers, being them single individuals or SMEs, to exchange information, to exchange funds. And the third are ancillary government services and systems like digital identity platform, financial management platform. These three elements, regulation, infrastructure, and systems, are the one that we believe are important in order to have a smooth take-up of digital financial services. Among these, I would like to mention some. First, as was mentioned as well beforehand, is digital connectivity and mobile phone penetration. As mobile has been a revolution in the way to dialogue and interact with the financial sector in the last years. Secondly is the participation of a wider set of entities in the offering of financial services. So not only traditional banks, but as well as we discussed during the day, fintechs and non-traditional provider that could leverage different operational and technological setup in order to address challenges that put the consumer at the center without having necessarily the legacy barriers that organizations with a longer tenure have created by the complexity of their organization itself. Thirdly, to enable the creation of a wide access point network by facilitating the use, for example, of agents that offer basic transactional services like cash-in and cash-out services, and also they offer an interface for the ones that do not have yet the opportunity to have a mobile and therefore to operate in some sense with a self-service use for the financial services. Fourthly, the use of authentication systems that leverage national identity system and biometric technology, because this technology and the identity system allow to create the necessary safeguard to ensure the security and therefore increase the trust in the system in performing transaction, thus being payments or being the purchase of a product or the servicing of a solution. So these are some of the elements that we believe are key, and of course, all the adoption of these technologies brings some challenges, a lot of challenges. Today we heard mentioning cybersecurity, operational risk related to data governance, the management of privacy, also the need with this advancement to maintain fair competition between the different players, where the new ones sometimes are advantaged because they have a better knowledge of technology and sometimes also more favorable regulatory framework that promotes indeed their take-up. So making a reference to what Professor Volker said before, I believe is key today as technology is so much ingrained into the solution that as well the regulator gain an high level of technical competence in order to be able to analyze the solution and also to recognize where these are not specifically coherent with the value proposition that they offer, and whether these are not in line with what the regulation says. Among the products that we see, they have driven mostly the transformation toward financial inclusion and that are driven by approaches that follow the creation of a regulatory and conducive environment, the use of infrastructure, and IT system. We see definitely mobile money, the creation of mobile money solution as one of the most innovative element or products that is brought to market in order to achieve financial inclusion. In this sense, the traditional banking sector is also achieving a similar user experience where instant payments are launched. And as I am closing to end my time, another element that I would like to stress that I believe is key also in Islamic finance to address is how the transfers from the states go to the poor as support, as income support. So the use of digital services to perform first the account opening for the people and then the transfer of money in a digital form, thus being e-money or simple funds on a standard account, is a key element in order to achieve two objectives. On one side, of course, to provide support to the poor, and this has a let's say, ethical implication in terms of a redistribution of the wealth from the state to the people that are mostly in need. And secondly, there is a benefit from financially including these people and then formalizing them within the economy more at large, as well training them in the use of technology, in the use of basic financial products, like it is a transactional account, but providing as well them the opportunity to then access potentially other services and products, therefore igniting a possible virtuous circle for the development of these people financial capabilities. I would pause here as we have probably some questions, and then there is also another panelist. Thank you a lot.
Thank you very much. Thank you, Francisco, for raising very important points again. So our next speaker is Nick Cameron. He's a senior manager at the Alliance for Financial Inclusion, and he will give us a good idea about the AFI. He also sits as one of the technical members for Islamic Financial Services Board that is responsible for the technical note on financial inclusion and Islamic finance. He holds a master's degree in Islamic finance from ANSIF, and he finished his first degree in accountancy from University Tenaga Nasional, right? Malaysia?
Malaysia.
Please, Brother Cameron, you have 9 minutes. Is that okay? Okay. Meanwhile, please participate in these polls that you are watching now on the screen. All right.
Thank you, Dr. Sami. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thank you again to the organizer, IFSB, and SAMA, the Central Bank of Saudi Arabia, for having AFI in this summit. We had a great knowledge sharing session for the past 2 days. In fact, for today also, we had a few of interesting discussions regarding things that we can relate to financial inclusions and also digital financial services. So we hope to continue with this session also. And before that, let me briefly mention about AFI. Can I have the slide? Okay. So AFI is a non-political and non-profit organizations owned and sustained by members through our annual membership fee. So we have few common members among AFI and also IFSB. We have 100 members who are central bankers and financial regulators from the emerging and developing countries, representing 85% of global unbanked populations, working together to advance financial inclusions. And our main role is to support members to develop and implement successful financial inclusion policy. So in my presentation today, we'll be focusing on the idea of Islamic finance and financial inclusions, and how is it be the catalyst of the use of Islamic finance to catalyze the financial inclusion. And the third part will be the DFS and inclusion, where I'm going to feature what AFI have done for digital financial services and financial inclusions. So I want to go one step back and then do a bit of the definitions on financial inclusion, where among of our panelists also did mentions from the part of access, usage, and the range of affordability and quality financial services. So these are the main keys that we have to understand, whether it's coming from mainstream financing or Islamic finance, and it will be delivered by formal financial services providers. So you can see that from the presentations that there's exclusions due to the religious belief. And then from the World Bank studies, it shows that around 9% or around 40 million, they excluded themselves due to religious belief. So this is another reason, apart from serving to the poor, that why we have to have Islamic finance as one of the financial providers to the main financing landscape. And as a catalyst, today we had pockets of conversations about financial inclusion in previous sessions. And here I would like to highlight how Islamic finance complements the conventional financial services landscape and is the alternative to the conventional debt financing by promoting risk-sharing contract and leverage on specific instruments of redistributions of wealth among societies. From one perspective, Islamic finance always be associated with sukuk and big ticket size. But from the facets of Islamic finance, it is very close to inclusion. We could see the opportunities in Islamic microfinance institutions and digital microfinance institutions for a greater inclusion market like in Asia, Bangladesh, Indonesia, Pakistan, that offer also stability in these sectors. So I would like also to share that from 2016, McKinsey, the Digital Finance for All have shown that digital finance services have increased the annual GDP by 6%, or equivalent to 3.7 trillion by 2025, and offer potentially 95 million jobs through digital financial services. And it could bring 1.6 billion excluded into the financial inclusions. Okay, these are the knowledge product that we have produced related to digital financial services. So I will share the link to the organizer, and then you can have access. So the range of our knowledge product comprises of from cybersecurities, the policy framework for responsible digital credit, and we have a guideline on data privacy, and also the latest one on the digital financial literacy. So we try to cover from the perspective of the need of our members, which are the regulators, and also try to facilitate the demand perspective from the market. Okay, sorry. And I would like to highlight, because it seems that a couple of aspects we discussed about the, the risk of having digital into the financial services. And then one of the things that we have came out with is the framework on the responsible digital credit. And we have identified, this is the minimum from our members, 10 parameters that could assist the regulators in addressing the responsible digital credit framework, from the clear legal mandates, to institution capacity, comprehensive and effective credit assessments, to transparency, code of conduct, to the point of like financial education of the masses, which is individual and also MSME. So this framework cover from the supply side and also from the demand side perspective, or the challenges of what the regulators are having. And in the technical notes number 3 that we have for financial inclusions and Islamic finance, I noticed that, there's some, some risk kind of like addresses to the technical note. So in this policy model on consumer protection for digital financial services, we have identified 5 key areas that give the guidelines on the policy environment, and also guideline for product, a guidance for the consumer, a guidance for the supervisory enforcement, and also guidance for the cross-cutting themes. The cross-cutting themes that I'm sharing here is basically the gender, inclusive green finance, and also youth. So from the gender perspective, we try to incorporate the element of gender in coming up with the policy on financial inclusion and digital financial services, taking into consideration 4 main things, which is from the demand side. What are the things that are required in terms of the consumer protections, the capability of consumer as a woman in terms of infrastructure, the gender-sensitive policy, and also regulations. Second part is on youth. These are some of the practical cases that we have. That today we heard about the Islamic crowdfunding we have in Malaysia. We also have in South Africa, and also Digital Bank for Youth in Abu Dhabi. From the green perspective, so this is relatively new for financial inclusion, and also for Islamic finance. We also have try to incorporate the element of green into financial inclusions, and we see some similarity when in Malaysia they have what we call the VBI, or value-based intermediations, that could be linked to the green digital inclusive. So I think that's about all from my presentations, and then I can take questions after this. Thank you.
Thank you, Cameron, for giving this informative and valuable overview of the AFI and its policies for SMEs. So let me come back to the panelists with a couple of questions. One is that about the costs. Many of the panelists talked about reducing the cost and how digital finance could reduce the cost, make it more efficient. But what we see now is that, for example, the transfer of small amounts of money would cost more than if you transfer a larger amount of money. So the cost is disproportionately burdened on the poor and the small users. Same thing in some cases for deposits. Small deposits are charged fees, but if you have a large deposit, then you are exempted. So does this enhance financial inclusion, or is digital technology now supporting financial inclusion, or is it not that much? So let me start with Brother Saud.
Thank you for this question. Of course, as Francisco mentioned, there are 3 areas in terms of technological innovation, regulation, system, and the infrastructure. And when we talk about the infrastructure, we talk about the ecosystem. Being a central banker, my role is to have the enabling infrastructure, enabling regulation for the financial inclusions. Regulation has to be risk-based, it has to be supportive, and that will help to support the technological innovation. Charges is one area, one important area where banks need to really think over it, because you cannot burden customers. Yes, you can reach them, but of course you cannot burden them with charges. So to get them back to to serve them with their financial needs. The experience in Oman, of course, as I mentioned in my presentation, that we put the infrastructure. The market share that we have reached already, 15%, that has not been achieved just by doing banking through the only branches. Technology, of course, help in that, through the mobile banking, through the internet banking, and through some, technological machines like, these multifunctional machines, ATMs, and all of that. So in conclusion, you have to make, proportionate. You have to make sure that, proportionate, charges and that support financial inclusion in this, area. Thank you.
Thank you, Saud. Amir, what do you think? How can we, obviously we have to admit that technology is costly, right? It costs money to invest and to develop this system and to install these systems. But then if we disproportionately charge the poor and the less able, then we are not using technology to enhance inclusion. So how do you think we can address this issue, Brother Amir?
Thank you so much. It's a very important question. And what you've highlighted is the difference between cost of service, the cost to serve, versus the pricing. And of course, the pricing is often driven by what the financial services provider believes the market will bear, as opposed to what their actual cost is for servicing the client. So when we talk about the cost advantages, we really are saying that on a per transaction basis, it is less expensive to reach a client. However, if a market actor believes that they can capture a higher price for serving that client, then we may exactly have the problem that you're highlighting, which is, does it become more costly for the smaller client, or even exploitative if it's a very high cost indeed. And I think that part of it is the transaction cost, and I think it is critical, and I believe Nick was talking about this as well in his presentation, that as lenders, what are the fair practices that need to be followed. So perhaps he can say more about cost, charges, and pricing there. It reminds us, though, of course, of even the lending costs be related to rates, right? Because rates often, when it comes to micro borrowers, historically have paid very, very high interest rates in a conventional setting, or profit rates in an Islamic finance setting. And what I would say to that is that, of course, there needs to be supervision and regulation to ensure that there is not exploitative pricing, whether that be structured through Sharia compliant or non-compliant structures or conventional structures. And also the idea that digital finance should allow for more competition. And we, as a general principle, see that increased competition improves pricing for the consumer. So that should help. But yes, there are the concerns that you raised, and they need to be looked at very carefully. And we need to ensure that the most vulnerable consumers are not taken advantage of.
Can we use zakat to subsidize the cost for the least advantaged group in the society?
With regards to zakah, of course, I'll defer to the scholars on that. I think a related point would be for al-gharimin category of zakah, which, again, you're not transaction costs, but people who have gone into irresponsible debt, or debt, which, let me not say that, debt that was unfairly placed on them. And it is fascinating to see that al-gharimin, people who are overcome with debt, is a category of zakah. And I would definitely think of that one there. Where I get concerned about transaction costs would be, is it really benefiting the customer, or is it benefiting the shareholder? I'm not sure how to look at that particular one. But when it comes to those who are in debt for reasons beyond their control, I feel like that's very interesting and innovative use.
Francisco, what do you think? Amir is saying competition will reduce the costs. Do you think this would help?
I think yes, whether it is coupled as well with more available information. I think it's very interesting, the differentiation between pricing and cost. Definitely, let's say automation and information technology is decreasing cost for the provider for providing the same type of operation. Now, as this is passed or not to the final beneficiary or to the final consumer, this is definitely something that is depending case by case. let's say our data specific on remittances for the last year, that, I mean, we analyze regularly the remittances data and the cost that remittances have in each country, and as well we can correlate this with account ownership and the use of digital financial services. And what we saw during COVID is that basically the cost for remittances has decreased more in the countries where account ownership and use of digital financial services was higher. So people that have the opportunity to use digital financial services during the COVID actually benefited more, because these services were able to provide the promised value proposition, and also as there was in general a shift from analogic to digital, there was as well a decrease in the price. Then you were posing another question, is why sometimes the cost of transfer in percentage of a small amount is higher compared to for small transaction versus large tickets. And I think here infrastructure definitely have a marginal cost which is extremely low, especially for processing payments. But for what we can observe, most of the financial service providers that put kind of a floor value, which is expressed in fixed terms. And this is what actually is creating is creating this distortion. So it is not a fixed percentage for processing a transaction with a cap eventually, but there is a lower bound fee. So these are, of course, competition-related elements. And I think there is still a lot of work to be done in order to achieve a more fair pricing that would match the sustainable development goal, especially for the services for the poor. Thank you.
Thank you very much, Francisco. So we have a clear now example of how technology and inclusion might diverge. So let me now ask Brother Cameron, since he is focusing in the area of SMEs, and all of you are actually working in the SMEs. But let me highlight this point. In 2019, BMT Bina Umma Indonesian Islamic Microfinance Cooperative issued the equivalent of $50,000 micro sukuk through the blockchain. But we haven't heard anything after that. Why micro sukuk through, or crypto sukuk, or tokenized sukuk, while they have the opportunity to reach out to larger audience and multiply the effect of retail sukuk? Why is it not catching up?
Thank you so much, Doctor. So I think, okay, coming back to the micro sukuk, I did mention about, initially when it comes to Islamic finance, the first thing that coined to most of the mind is about sukuk, and then all the big ticket size. But now, like Indonesia have done great job when it comes to their MFI. And then, I think one of the things that when it comes to digitalizations of MFI, it will, advance on the scalability of the MFI itself as compared to the traditional mode. So the scope are wider. In terms of the Bitcoin you mentioned, I have to reserve on my opinion on that. But I think for MFI, just want to echo on the cost also, because it reflects on MFI and other forms of micro financial inclusion tools, because by using technology, it also reduces the risk of leakages is one thing, and it's more transparent. So that's basically how it will, trickle down in the forms of, lower costs, in addition to all those additional costs that mentioned by previous panelists. And I also would like to address that maybe we can also leverage on the Islamic finance, Islamic finance services like zakat and wakaf that could reduce the cost of, like, say, financing to the MSME instead of like 6% or 8%. So the charges can be reduced by using some of the forms from the Islamic finance organization. Yeah.
Thank you very much. Brother Saud, you are in the regulatory sector. So would you consider these micro sukuk to be a potential to enhance financial inclusion by allowing small and micro businesses to access capital markets?
Of course, there is no issue. I mean, on that, capital markets in Oman comes under the Capital Market Authority, so that they have maybe, better say on this. But in Oman, we have a case where the government, the sovereign sukuk, specifically issues sukuk for retailers. And that is basically, to get these people and benefit from this, issue. And also to support the capital market, in this area. So I'm sure all of these instruments are in the right directions for financial inclusion. As I mentioned, but you need to have the enabling, environment, the framework, the proportionate, I would say, framework on these, instruments and products. Thank you.
Thank you very much. Amir, would you like to comment on micro sukuk or crypto sukuk or tokenized sukuk?
I would certainly say, as we just heard from Saud, that when sovereign issuances include retail tranches, that's a very good thing. There are two objectives here, right, being served, or let's distinguish between two objectives. One is giving access to the retail investor, so the retail investor can have high quality, safe, and income generating, yielding assets, investments. And so that, a sovereign sukuk is very good for that, because of course the risk will be much lower and it's suitable for every type of investor, including a retail investor. When it comes to these, the micro issuances, I'm not familiar with this particular issuance, so I can't speak about it in detail. But my question would be, of course, the quality of that portfolio. And what we would not want to happen is a less sophisticated retail investor participating in a sukuk which is not rated, doesn't have the same safety, and then, God forbid, loses his or her principal. So that's what I'd be concerned about. So I would say making retail sukuk available is a very important thing. And it actually is something we need to stress because, as the panelists will be very well aware, there is so much demand for sukuk and so much oversubscription that it's certainly possible to place all of your sukuk amongst the banks and the institutional investors. So having a dedicated retail tranche is a good thing, as was done in Oman. When it comes to crypto and blockchain, again, there could be a place for it, but I would want to start with the more sophisticated side rather than putting that on retail at the moment.
Francisco, would you like to comment on this from a financial sector development point of view?
Yeah, I think that the technology, per se, crypto or blockchain in general, it depends on to what extent the consumers they have to integrate and understand it. Whether this is only a financial management tool for administering information in a certain and record the transaction in a certain way versus let's say a standard database. This is something which I would say has no impact at all on the end consumer. So on this kind, the sukuk subscriber, but it is important here what it was mentioned before, that the regulatory framework and the controls that are performed over the instruments that are issued, these let's say they conform and they comply with the regulation. And the overseer should be, or the supervisor should be in a position to well understand the instrument and to monitor it over time, especially in case where the technology allows, through its complexity, to create additional clauses and opportunities to create complexity in the product itself. So I would say very good to adopt new technologies, and it is important that the consumer should be aware of it, in case this is not only a system to manage something very standard from a product construct perspective, but it is something that inherently is complex as a financial product. So that's, I think, the important difference that regulators should be able to discern, and then allow or not the collocation of the products in the market to different tiers of consumers. Thank you.
Thank you very much. To conclude this session, because we have another session that should start soon, technology could be very useful, but it is not a foregone conclusion that technology will automatically improve financial inclusion. Do you agree on this? So there is a lot of work to do on the regulatory side, on the industry side, and financial industry side, as well as on the technology side. With this, I conclude, and thank you very much to all our panelists.
Thank you.
Thank you very much.
شكرا جزيلا لرئيس الجلسة
والمتحدثين. Thank you so much for the moderator of the session and the keynote speakers. شكرا للمتحدثين ومدير هذه الجلسة. السيدات والسادة, ladies and gentlemen.
نحن على موعد الآن مع الجلسة الأخيرة لهذا اليوم والتي تأتي
final session about the cooperation coordination of the efforts of the Islamic financial services, digital financial services, and sustainability after the factors of social, environmental, governance of corporations have become part and parcel of the decisions of investment. And the Islamic sector, of course, Islamic investment sector has become more important for sustainability. This session yet to be moderated, His Excellency Dr. Elul Nawal. Please, the floor is yours. Please welcome him to the stage.
Bismillah ar-Rahman ar-Rahim. Very good afternoon to all of you. It is indeed a very long day, and I think His Excellency Dr. Fahad gave me this idea, and that's why we look at the timing, and we look at that if we go out for break, it will be very difficult for us to get people to stay for the last session. So that's why we decided to seek the audience of the participants and our excellencies here so that we can continue with this session, so that it will be the last session. So when we go out, we can have as much break as we can. And we don't want to be guilty for anyone missing Umrah, inshallah. So we're very much concerned. Once again, thank you very much, most sincerely, for your participation in the 15th IFSB Summit. And we always extend and appreciate the support that we get from the Saudi Central Bank for this wonderful arrangement and excellent facilities. We'll be having the last session now. We had a very extensive discussion in the first 3 sessions today, looking at fintech, looking at the regtech and supertech, and now we are looking at how we can harness digital transformation to push forward the financial inclusion agenda. In this session, which is the last session, we'll be looking at the achieving synergy between digital Islamic finance as well as sustainability. To discuss this topic, we'll be having our esteemed panelists. I'll be inviting you to the stage, please. We have Mr. Hank. Mr. Hank is the Managing Director of Qatar Financial Center Authority. You are welcome to the stage, Mr. Hank. We also have His Excellency Mr. Said Samar Hussain. He is the Executive Director of the State Bank of Pakistan. We have Dr. Yahya Abdurrahman. He is the Chairman and CEO of Lariva Bank of Wita. Distinguished panelists, you are welcome to the stage, and thank you once again for your time and participation and patience. And I think it is indeed a very wonderful 2 days that we have from the beginning, yesterday to today. Our session is actually looking at how the ESGs, that is by nature or inherently blended with Islamic finance principles, can be used to now drive synergy for sustainability and Islamic finance based on the digitalization that we are having. Now, I believe we have a regulator, 2 regulators, and then we have a market player. And then the issue of sustainability is something that is a great concern for all, particularly now post-COVID, during COVID-19 and now post-COVID-19. So we would like to perhaps I would like to start with Mr. Heng to hear your own perspective with regard to how we can achieve synergy between Islamic finance, digitalization, and sustainability. Maybe perhaps if there's some work that is being done by Qatar Finance Center as a regulator, we would like to know how you try to achieve that synergy.
Yeah, thank you, Dr. Bello. Thank you, IFSB and SAMA for being here. It's wonderful. I've learned a lot over these last 3 days, so many good best practices shared with each other. I think that's why we're here. Allow me a short introduction of Qatar. First of all, everything I say is my own opinion, not necessarily the opinion of Qatar Financial Center. I'm not a regulator. I'm a financial sector developer, and sometimes I fight with the regulators or try to get things done. But in Qatar, like many other countries, which I heard over the last few days, you know, we have a Muslim population, a young population, very tech-savvy, and a government and a central bank who would like to get things done in that area. So the central bank basically is the orchestrator of fintech, and they have asked the Qatar Development Bank and ourselves, the Qatar Financial Center, to develop the Islamic fintech sector. Soon the central bank will also come with a sandbox. They have announced already the payment service provider license. So we are getting into shape, and we see already a lot of attraction because of our incubator and accelerator program. So that is good news actually, and I think we're sort of at par with the other GCC countries there. On top of that, ESG becomes more and more mainstream. I see also the Sovereign Wealth Fund more interested in ESG, and the Qatar Stock Exchange is creating a benchmark on ESG. So they're forcing the listed companies to be ESG compliant, and otherwise you will be put on a list, and then people will not invest in you. So I think those developments are necessarily good. Then basically your question, I don't know how many minutes I have. You have 10 minutes. Okay, so I'll try to, I have basically these are observations also, and these are my own opinion. The first topic, I have 3 topics. The first is, you know, a message to the Islamic finance world is don't let the conventional sector hijack ESG. The second is use digitization to democratize. And the third one will be my observations. I think the first message is, and some of the speakers have already said it, Islamic investments or Sharia principled investments have always been responsible, and now suddenly we have ESG, but ESG and Sharia investments have an overlap. Somebody said there should be a merger. And it's moving fast in the world, and somehow it seems, with all due respect, that Islamic finance is too modest. You know, somebody else will hijack this space, and I think it's time to stand up as regulators, as governments, as financial institutions to say, hey guys, you know, we have done this already for the last, whatever, 1400 years, and listen to us, learn from us, and also invest in our products because they meet the criteria of ESG. So I think that would be the first. Then also what is in our control is specifically the GCC countries with rich sovereign wealth funds. I think they should invest more in Islamic products. In Qatar, we have the largest Islamic ETF in the world. Still, you know, not necessarily the sovereign wealth funds invest in them. So I think we need more of these opportunities, more Islamic funds, more sukuk, more green sukuk, more social impact sukuk, etc. And it starts with the governments, and then later we should go down to banks that issue these instruments. The other thing I notice is that the development of the local financial markets are not as strong as other markets. I don't see much corporate sukuk, although I see it happening in Malaysia, Indonesia. But I think in this part of the world, I think we can definitely do that. And the perception is that sukuk issuance, for instance, is expensive. And there are ways to sort of make that cheaper. You know, regulators can provide standard formulas. I would like to highlight one initiative of a fintech company that is addressing this. It's a Saudi-owned fintech company called WeTak. They're active now in Dubai, getting a license, and I think in Saudi as well. And they take the niche that nobody of the big banks looks at and will democratize this sukuk issuance by using blockchain, by using standardized services and by using lawyers that can do things much cheaper than in the old-fashioned way. So I think that's promising, and we will hear a lot of them soon. So the other thing is basically the second part is use digitization to democratize. And we heard in the last panel already so many ideas, and I'm also surprised why all these workers in our countries still have to pay so much money to transfer money back home. Yeah, I think it's ridiculous. And people say, well, we cannot do it, we're regulators, but I think you can force the marketplace. Guys, you know, for the first, whatever, 5,000 real, we don't charge anything for a remittance. And soon there will be players out there that offer this for free in return of the data. Because ultimately the data that we all have and all own is worth something for other players, and they will need to have our data, and then they will offer things for free. And I'm sure they will be coming also to help that segment. The other thing I notice is that I'm surprised that we talk about financial inclusion. Each regulator has financial inclusion as the top priority, but it's not happening. I don't see the gap between, let's say, the bankable society and the non-bankable society becoming smaller. So we do all these great things now because, let's be honest, the banks have been sleeping. There was no innovation. Suddenly we have all been waken up by fintech. Wow, panic. And then the regulators try to solve this all. And I think we're making great progress. But nobody is actually bridging that to the other part, let's say the non-bankable. And there are attempts like SME financing, and I think technology can do that, but we should encourage people to do that even more. I'll give you one example. I saw a fintech company in South Africa called Paycode, and they deliver what they say the last mile delivery of financial services. They go out in the field and go to people that don't have an identity card. They will make sure that with biometrics, they get a card on the spot. And already in 8 African countries, they have 5 million users. They can transfer money to each other to a system without using the bank. So, and I think that's a good example. MasterCard is now teaming up with them. So I'm pretty sure that some of these developments will go big, and you don't need the banks for that. So the banks, I was surprised that when fintech came, you know, we have seen a few disruptors like Revolut or N26 in Europe. But now they all partner with the banks, and that is convenient for the banks because, you know, then, you know, they will still survive. But I hope there will be more disruption, and I think it would be great if there could be disruption from the Islamic side as well, because that would bridge, I think, the area of financial inclusion where that is very much needed. And I hope that will happen. And I heard some ideas around the group today about setting up a digital Islamic bank. And I think that would be fantastic. And I think the message to the countries in the Islamic world is, you know, team up together. Yes, we have borders. Yes, we have different regulations. They're all not so different. Let's team up together and do something for that group that is currently unbanked. Then we come to my last point is basically, so what should we then change? I've seen so many examples which I will take home to Qatar, say no, but the message is let's start today and not wait for another research or another study or regulator to be ready for it. Now let's start today. And one of the ideas that I noticed, and IFSB can play a role, is so many of these regulations look similar. So why can't we have some sort of passporting? If there's sort of basic set of regulations, say under these conditions we accept fintech or Islamic fintech or whatever new technology, and then a country can say, like, let's say Qatar is a small country, and they don't want too many disruptions, so they say, well, we allow only 5 of these payment service providers. Saudi is a big country, we can have 15, you know? So then you can play a bit, but then you have the same basic regulations which I would call passporting. And the other thing, and that's my last point, what I noticed, I was impressed by the presentations of Indonesia, Malaysia, and Pakistan. You see these very populous countries moving very fast ahead. And Indonesia, I think the fintech category most is the P2P, the peer-to-peer area, which is amazing because in other markets that doesn't even exist. So why don't we team up, let's say, some of these countries with some of the, let's say, richer countries from this part of the world? So then you have Saudi teaming up with Indonesia, Qatar teaming up with Pakistan, UAE teaming up with India, or whatever. You know? So then, on top of all the good work IFSB is doing, we can create tandems to make things actually happen. That's in a nutshell, and these are all my personal observations, so this is not necessarily Qatar's opinion, but I think we have so many opportunities in this Islamic finance world, and I think we should share and start tomorrow.
Excellent. I mean, Hank, you just made mention of 2 points, I think that catches my attention. One, you said, we don't let the financial sector hijack the ESG agenda.
Yes.
So I think that is a very interesting point that you mentioned, but I will come back to maybe perhaps you will need to explain what do you mean, in what way that the regulators should not allow or the industry should not allow the financial sector to hijack the ESG agenda. And I believe that's the essence of the discussion that we're having now today, and to look at how this gap that you mentioned between the unbankable and the bankable can be narrowed. And that's why we believe that the digitalization is an accelerator to close this gap. But this alone cannot work if we do not bring the issue of ESG and sustainability into it. That was a great point that you made there. Yeah. But I'll come back to you maybe perhaps. Maybe I'll go to Mr. Said Samar, and Your Excellency, perhaps if you can share your own perspective, particularly with regard to Pakistan, on how do you drive synergy between digitalized Islamic finance solutions and sustainability?
Thank you, Dr. Bello. I'll start with something on a lighter note. Sometimes it's always good, you see, to be a loser yourself, you see. And why I'm saying that, during the lunch, I betted with myself that once I'll enter into the last session, we'll not have more than 12 audience. But I lost. I can count that there are 78 physical audience present here. So that's very good to be done. And I would like to thank Central Bank Saudi Arabia. Dr. Fahad is sitting in front of us, you see, to be an extremely good host. And I would also like to thank IFSB. I'll start with where you touched upon. And that was, you see, again, a question that I wanted to ask in the last session, which was on financial inclusion. That the panelists said that there is a natural nexus between Islamic finance and financial inclusion. But the starking figure and the statistics is if you look at the total population which is financially excluded across the world, half of it is Muslim. So something went wrong somewhere. So that was, you see, I totally endorse your point. Now, Dr. Bello, what I'll try to do today is that I'll try to, from the central bank point of view, I'll try to create linkages among different components, because it's an extremely heavy subject, you see. ESG, digitalization of Islamic banking. Islamic banking and digitalization, we have been discussing it for the last 2 days. Now, linking that with environmental aspect, social, and governance, that brings quite a lot of challenge. But I'll try to simplify that. What sort of fintech market we are looking at? So when I was looking at some numbers, so the Global Islamic Fintech Report 2021 says that the fintech OIC size is 49 billion. It's only 0.7% compared to the conventional side. But when we compare the two in terms of the growth, there's a huge difference. This Islamic one is increasing by a CAGR of 21% compared to the conventional, where the CAGR is only 15%. Now, in terms of ESG and Islamic finance, there are certain commonalities. I'll just list down that. I'm not going to discuss those in detail. These, of course, have been discussed, are risk sharing, avoiding interest, poverty alleviation, and financial inclusion. I'll come to the financial inclusion in a minute. What is difference? Because I asked that question in one of the sessions. What is the difference between an ESG compliant fintech and an Islamic fintech, if an Islamic fintech exists? So the difference is that Islamic fintech has all those characteristics which an ESG fintech has. But then it has got an additional feature, which is the element of faith sensitivity. So that makes it Islamic fintech. Why Islamic fintech, Islamic finance is more relevant and closely linked with the social side? So there are a lot of commonalities, both in Islamic finance and the social objectives. For example, alcohol is haram in Islamic finance. It has its own, you see, repercussions when we talk of the social aspects. So is weapons, pork, tobacco. Tobacco, you see, it has got an environmental issue. It has got also the health issue, social side. And at the same time, it's not permissible in Islamic finance. So there are also linkages between the social and the Islamic finance side. What are the sources? What are the biggest sources of social finance? So if we look at the numbers, then zakat, which is of course an obligatory charity, sadaqah, which is a voluntary charity, and waqf, which is an endowment. We discussed that about yesterday and on the first day. These are, you see, are the sources which can become a source of social welfare. How can fintech or artificial intelligence or digitalization help in social finance? So an example is zakat collection and distribution. So if you've got that AI system available with you, how easier would it be, you see, to provide zakat to its mustahiqeen, those who deserve that. And here I would like to give you an example of Pakistan. During COVID, there is a program which is ASAS, which provides cash, you see, support to those who deserves. And millions of families have got that, you see, through the digital sources. So again, that is an area where the digital finance can be very helpful, you see, in terms of social finance as well. Digital crowdfunding could also be one of the examples. Now I come to the financial inclusion, because these are all interlinked. So I'm just trying to create a linkage. I mentioned that 50% of the world population which is financially excluded are Muslim. So the one obvious reason that comes to me, because a bigger portion of that is coming from the jurisdiction like ourselves, is probably the perception of Islamic finance, perception of Islamic banking. Which Sharia scholars accept Islamic banking and Islamic banking as Islamic banking? Some say, no, it's not. So probably there is a need, and that is an area where Dr. Bello, the forum like yourself, can play a role in terms of addressing to the perception issues. And of course, within the financial inclusion, then there's another aspect. It's a gender, you see, exclusion, which is much higher than the normal financial exclusion. How to address to that gender inequality in terms of the financial inclusion. I was just reading somewhere that it is an era of digital natives. And I was reading that and I just quote that sentence, you're not going to be able to access that younger generation if you're not in the palm of their hand. So that states clearly how important is that. I'm coming close to my points, but I'll definitely touch in less than half a minute on green digital finance. Again, that an area which is extremely important from the Islamic digitalization of Islamic finance. Pakistan has a number of examples when the central bank has got its own facilities which are not only Sharia compliant, but also purely for green finance. I can come to that in the second round of discussion if you need on that, you see. Of course, green sukuk can also play a role. Finally, the governance. I touched upon E, I touched upon S, and finally on governance. Imagine which could be the better example in terms of governance than the Sharia compliant instrument themselves. Be it Mudarba, Murabaha, Ijara, clearly defined roles and responsibilities, clearly disclose transparency in terms of earning, in terms of expenses. So in terms of governance, Islamic finance and Sharia compliant instrument can again be, you see, one of the finance instruments. Finally, I would conclude by saying that don't get into ESR, a sustainable digital Islamic finance, just for the sake of it, you see, just on its name or just by its slogan. First, try to understand the linkages among these components and convince yourself. And that's a message to all market practitioners. And once you're convinced, then proceed with that. Thank you.
Thank you very much, Mr. Said Samari. I actually touched a lot of points, and within a short period of time. That's interesting to know that. I mean, you have touched on the uses of Islamic social finance instrument like zakat and waqaf, perhaps to drive the sustainability agenda, and that is actually a very, very interesting point that you make there. Now, one other point that you mentioned is regarding the digitalization of crowdfunding using the Islamic finance. So, but maybe perhaps I will come back to you with a question on the practices on how you think this has been realized in Pakistan, maybe perhaps in what sense that for example, the green sukuk can be digitalized or is digitalized to drive this sustainability agenda. That is also another area. You talk a very important point, which is governance, your last point. Governance is very essential. There should be a proper governance framework for this entire ecosystem to exist and to realize the synergy that we are expecting between Islamic finance, ESG, and sustainability. So, and then this requires some kind of clear roles and responsibility between the players. We had Mr. Hang saying that, okay, you regulators don't allow the financial sector to hijack this initiative. And now this is actually the same point that you are talking about in terms of governance, and which is very an important point that you mentioned there. Now, one important point perhaps is you talk about gender and perception. How do we change the perception of the public regarding all these ESG initiatives, the digitalization and Islamic finance? Traditionally, we always encourage the industry and marketplace, particularly when they are promoting Islamic finance. Time has come that we don't promote Islamic finance based on the religious faith perspective. We promote Islamic finance based on its economic value perspective, the value that it adds to the well-being, because now it's something that goes beyond only Muslim majority jurisdictions, but across all over the world. Anyway, we'll come back to you. I will come back to you with some follow-up questions as time permit. I put these remarks because you do not utilize your full 10 minutes. So hopefully now it's time for Dr. Yahya to share his own perspective on how do you think we can achieve this synergy actually between the ESG, digital Islamic finance solution, and sustainability in general?
Bismillah ar-Rahman ar-Rahim. I just want to talk about my experience operating a bank in the United States. In the United States, we have a very important regulation called the CRA. C stands for community, R is reinvestment, A is act. And the regulation is very unique. It says that if you collect money from a community, you have to decide what are the perimeters of this community, what we call an assessment area. And 50% of what you collect and deposit got to be invested back in the assessment area in terms of loans. And 50% of these loans should be inside the assessment area. And the loan should be given to a distribution of recipients that would reflect the distribution of demography in that community. So if there is a low and medium income families representing 5% and you don't give them anything, then you are not complying with the Community Reinvestment Act, and the punishment is severe. They can really suspend your charter operating as a bank. And that Community Reinvestment Act is also extended to help the less privileged communities. There is a category of banks called the MDI, the minority depository institutions. The minority depository institutions are institutions which are owned by minorities. It can be African Americans, can be Latinos, can be Chinese, and can be South Asians. It can be women, and so on and so forth. And there is also another category of investment companies, which is called the Community Development Financial Institutions, CDFI. And these are institutions that develop projects, construction projects, development projects, housing projects for the less privileged and people who are in need. So we cannot say that Islamic financing is doing this, Islamic financing is doing that. The regulators should define how to help those who are less fortunate in the community. And we actually started in 1987 by a small finance company. We had only $200,000 of capital, and we kept developing it. And today we own a finance company which has $10 million of capital and a full-service national bank, also community bank, which is $20 million in capital. We manage a servicing portfolio of $600 million. Bank of America has been impressed by our performance. They invested 4.9% shares in our company, and Citibank is very happy with what we're doing. So they made all of their ATM machines available to us, and so on and so forth. And that is inclusion. Now, the other side of inclusion is to help immigrant communities to know their ways to the bank. And that's what we specialize in. We try to explain to the communities how to realize what we call the American dream. And the American dream is to own your means of transportation, your car, and to own your own home. And we have done that very easy. And the key to that is cost. And we were talking in a previous session about the cost of technology. And we get people who sell you different programs and so on. Oh, you will save $5 an account. When you do the math, you will save $5. You might spend $6 or $7 on things which have to do with cybersecurity and for training and hiring people who can manage that thing. So it is not just the technology, it is the intent of what you want to do. What is your goal of what you're doing? And the real cost contributor to reduce cost are two sources. Number one, you have a good loan portfolio with a very small losses. So your allowance for loan losses will be much lower, and that cost will be lower. And number two, you hire men and women who are dedicated to the cause of serving the community. And the way to do that is to hire them fresh from college, and you train them, and we have done that over the last 18 years since I came to run our bank, which we own. So the third thing which is important is credibility, because credibility is not earned overnight, but credibility is earned over years. For instance, we have had some tough times in the United States. We've had customers losing their jobs, honorable engineers, accountants, doctors, and so on and so forth. How do you solve this problem? By going out and foreclosing their homes? So what we did, we started a fund called the Miskeen Fund. Miskeen means less fortunate fund for Mr. Kirk here. So the Miskeen Fund, we put in it any unintended interest that was earned. We put in it the delinquent, difficult guys who take advantage of the fact that we don't charge any late fees. And we put in it the Zakah funds. So we tell the customer, you know, we call the customer and we really proctor the payment performance of every customer on a daily basis. Anytime a customer is 1 or 2 days late, we call them up, and in many cases we find that they lost their job. And we tell them, don't worry about it. We're going to give you a qard hasana, which means no interest loan to make the payments for the next 3 months until you find a job. If you don't find a job in 3 months, we'll extend it for 3 more months. And in many cases, we have tears, people crying on the phone, appreciating what you're doing. And that's what you make out of reputation. This is compassion. You know, this is what makes you an Islamic banker, a Christian banker, a Jewish banker, whatever banker you want to call, but you are a passionate, compassionate banker that really takes care of people and takes care of their needs. I have a presentation here. If you would allow me to present it, I would be glad to share it with you quickly, all right, in the next 5 minutes.
We will be very happy to have and see your presentation, but because of time,
all right,
Dr. Hayat, maybe you can summarize the...
I just have, I have a little thing of what we advertise. If you look at your back here, and this is a typical advertisement of encouraging young men and women to get married and to own a home and to own a car and to start a family. And there is a wonderful movie, an American movie that I want to invite everybody to see. It's called It's a Wonderful Life. That was a foundation of the community banking movement that actually has helped develop America. And if you want to talk about Islamic banking is not the mega banks that you see around. It is the banks of the rich. People, families or rich families making big banks, and oh, I got an Islamic bank. Get out of here. Islamic banks are community banks. Communities, small, that are managed by members of the community, that are for the community and to help the community and to develop the community. That is the whole idea of what we call it in America, riba-free bank or ribbit-free bank or responsible finance, whatever you want to call it. And we serve everyone. We serve every faith. We don't ask in America, what's your faith? The same way I used to grow up in Egypt 52 years ago. Nobody asked anybody, what's your religion or who you are and so on. I don't know where this is coming from these days, but in America we don't ask. And that is what makes a difference. It is you that makes the difference. When you touch people's hearts, people's minds, and people's pockets, then you make a difference. Thank you very much.
Thank you very much, Dr. That's really wonderful. I mean, you actually touch a lot of things that is real ESG, products that you are providing in your bank. And I appreciate the fact that you just mentioned that you have this Miskin funds. It is interesting to know that about the Miskin funds. This is very, very interesting. But I don't know whether...
We've had it actually for about 15 years now. But we don't advertise for it because we want to get the reward from the higher authority.
Alhamdulillah.
So, not the government authority, but much higher authority.
Much higher authority. So I don't know whether you intend, what is the plan for digitalizing this Miskin funds? Is it digitalized or you have to see the person physically and you see his condition before he benefits from this Miskin fund? Because that's where digitalization is coming about.
Well, it is, the real key is a very simple, basic banking key, and it is called Know Your Customer. And what I'm afraid of is what I heard about technology and digitization and so on. It is designed to not to know your customer. Just, I finish it in 15 minutes. I finish it in 5 minutes. What's the point? The whole idea is to have a relationship with a customer. Then he or she can trust you, and you can be a member of their family, and they can be a member of your family. Then you can make a difference in them. This is how banking was developed in the good old days. It is not developed by pushing buttons, because that can get you and them in trouble. See, the whole idea is if you dig a deep well of the pit of loans that people cannot pay back, you'll be responsible in this life by the government and in the hereafter by the higher authority, Almighty God, because you have facilitated them to live a miserable life, not a happy life. So the Miskeen Fund is actually done on a private basis. I personally call the customer and tell him, and we send him to a private person, a specialist, who has done it many, many times, and they can say, well, this 3 month that we help you with, you can spread it over 2 years or 3 years, interest-free, so we can make it easy for them. But we'll never find a member of the community on the street because we are foreclosing in his home. Now, in case a customer, we've had 2 cases where customers gave us the keys because they went back home. I don't want it anymore. So we sold the house, we made more money than the loan. Guess what happened with that more money? We didn't keep it in the coffers of the bank. We sent it back to them. And they call us up and they say, well, what are you doing? I don't need this money. No, it's your money. And that's not what's done in the regular banking scheme. That is what makes a difference in what you do. It's not the labels, it is not the claims, it is what you do.
Thank you. I mean, that's wonderful initiatives there you have. But maybe perhaps, I don't know, whether the audience would like to know who are the contributors to these funds, and is it only the banks, that customers that are the beneficiaries of this fund? Because you still have like 1 minute just out of your time. That's why I'm asking this question. So I utilize your 10 minutes.
Tell me what you want me to say.
So I mean, who contribute to this fund? Is it from the bank shareholders fund?
No,
or from the...
Because of the banking regulations, we have 2 institutions. We have a finance institution, which is a finance company, whereby the capital is at risk, full risk. And then we have the bank, which is a depository institution, where your capital and the deposits of the public are at risk. So this is not done by the bank, of course, because it's not regulatorily accepted. It is done by the finance company. So the finance company calls the customer and say, we'll be glad to help you, and we help them according to the rules and regulations. And it's a very simple agreement that it says that I'll pay you back at your ease, whatever your ability is, until you find a job. And people who found jobs, you don't know what they have done in reward to us. That's the kind of thing we do, very humble.
That's really wonderful, Dr. I mean, Allah subhanahu wa ta'ala reward your efforts. It's good to know that maybe hopefully in the next summit or years to come, we'll like to hear how you digitalize these products that are sustainability related products. That's great. I mean, we have a poll. You please participate in this poll, in which the question is, which among the following do you consider the most important factor for enhancing sustainability through digital Islamic finance? So the options are there. Please fill in and make a contribution to this poll, because the IFSB will be using all the results of this poll in our future analysis, especially when we are writing some kind of key drivers for each of these issues that we ask questions about. Now, perhaps we still have some few minutes. Maybe I'll just give each speaker just 2 minutes only, because we are running out of time. We intend to finish by 4, bi-Iznillah ta'ala, including His Excellency's speech. So maybe we just, within just maybe 6 minutes, if I can maybe go to Mr. Hank. Maybe if you want to respond to my question, that would be great. Why do you think that the regulators should not let the financial institutions hijack the ESG agenda?
Yeah, I had time to think, yes. But I didn't mean that the regulators hijack this. I mean that let's say the conventional non-Islamic finance world is hijacking ESG. So then, let's say all the financial institutions, pension funds in the Western world, you know, they want something ESG. And I think it makes sense to merge this ESG and Islamic investments. And maybe we have to create a sort of Islamic pillar institution that gives a stamp. So this is Islamic and ESG. Because otherwise, you know, soon in London there will be another institution that says, only if we put a stamp on it, it's ESG, and for the rest, nothing counts. So take your, my message is basically, I can see this already happening in Western Europe, you know, take your position, and it starts with government saying, okay, from now on we only issue not bonds, we issue sukuk. You know, make it clear that this is a product that people like to invest in because it's good.
Excellent.
And then the last point, I have one more minute. Basically, even it's a great story about the community bank, and I truly believe that. But it's old-fashioned thinking. What I see happening now with the fintech companies, they think on behalf of the customer. They solve with technology the problems that communities have or SMEs have or certain segments have. Example here in Saudi is this Lendo. You know, I think they're still in the sandbox, but they will create a platform because that becomes a trend, platformization. They will create a platform that people can offer their receivables and get finance. Not necessarily by a bank, but it could be a fund. So platformization, tokenization will solve many issues. And yes, the banks will have less business because of that. And that's not necessarily bad, but you have to open up new markets that otherwise the banks would not serve.
Excellent. Mr. Said?
Thank you. In my allocated 2 minutes, I'll wrap up, you see. Dr. Bello, you touched upon some of the points that I'll be very quickly touching upon those as well. Gender inclusion, that's an issue you see in a number of jurisdictions. So the prescription for that we used is that someone has to take a lead. And actually the central bank did take the lead in that particular case. We went to the financial institutions and gave them a policy, which is called banking on equality, where actually the banks have been given targets that in terms of your own staff, in terms of your products, by this much time, you'll have to do this one. Why that has been said? Because there was huge difference, you see, huge exclusion. So now all banks by a certain time would be using gender lens in developing all of their products and services. You talked about crowdfunding, P2P lending. A dedicated department in the central bank has been set up, which actually would be doing these projects on a sandbox-based approach base. Of course, SEC has also a very key role in that. What central bank is very actively doing, and yesterday Dr. Reza Bakir, Governor Central Bank, also mentioned about, is the digital banking. And there you can have a digital Islamic bank as well. And then you can have digital SME bank and things like that. Fintech is also another area which is being very actively considered. Open banking, again, is an area where on the basis of the information available on sharing basis, can be utilized to address to these issues. The final point on the governance that you mentioned, probably there's a need, it's just a thought, there's a need to develop some sort of, governance framework for the ESG digital Islamic banking or Islamic finance on the pattern as we have for the Sharia compliance governance framework. So that's sort of the framework is also needed to be developed. And probably that is an area where IFSB can play a role. Thank you.
Thank you very much, Mr. Sumar. Yes, Dr. Aha?
I just want to share with you, during the COVID situation, the United States government has allowed money to be paid in a program called the Paycheck Protection Program, where people would say that I was working, I lost my job, so we give them. And most of the big banks, they focused on the multi-million-dollar situations. We focused on the small people, not because we call ourselves them, because we, deep inside, We feel that we should serve the community, Christians, Jews, Muslims, or anybody. Wallahi, we had applicants for $97, and we recognized them. And my staff said, "You are wasting your time." I said, "No, these are the people that are sent to us as a test from Allah subhanahu wa ta'ala to see if you stand by what you believe and claim you are," and we have done that. And many people, $1,000, $2,000. And of course, others were interested in the millions of dollars, but we have. And the rewards come to us. Rest assured, the rewards will come to you, not in paradise, that is for sure, but it's going to be in this world. Pakistan has got wonderful examples of social programs using Islamic finance. And he knows about them more than I do, but I know a little bit about what happens in Pakistan. Millions of dollars are collected. Hundreds of thousands of people have been helped. And this is the wonderful nature of our system. The kids grow up with the values that mom and dad are teaching them. So keep up the good work. We're very proud of you. And the future is going to be bright. Inshallah, you, the young generation, will make a better future for this ummah than the one that we made. And I hope that your grandkids will be taught to do the same, inshallah. Thank you very much.
Thank you very much, Dr. All right, that's just to say people are still awake. That's great. Thank you very much. That's wonderful. I believe this clapping is because of the session was nice, not because we are closing. All right. We may have just, if possible, 1 or 2 questions only, but very quick ones, if any. Otherwise, I'll just summarize the session and we are off the stage. If there is no question, it means the clapping was actually the session was ending, not.
No questions. Everybody wants to go home.
All right. Okay. We have 2 questions. Yes, Fadal. Please give him the mic.
Assalamu alaikum wa rahmatullahi wa barakatuh. My question actually to Dr. Hick mentioned the inclusion, financial inclusion under the ESG. Don't you think that we need to rethink about this financial inclusion and the fintech, especially for member countries of IFSB? We need to have some points to say. Number one, most of those countries actually fall under the term of third world countries, where they need a development in their IT securities, protection of customers, many cases of hijacking the customer's account, stealing their money, need more regulations, need more providing of security, IT security, I mean, before including them in the financial inclusion, fintech, or digitized applications, where they could be exposed to many security threats, or many, let's say, facing professional criminals, professional IT criminals who will take their wealth through a PIN number or whatever. Thank you.
Mr. Hank, please. Yes, please. Yeah.
Oh, it's a question for him, for Mr. Hank? Oh. Yeah, for you. Yeah.
But I think...
Oh, no, I think you mentioned Dr. So I'm not a doctor. I think I'm the only non-PhD.
So maybe perhaps if you can respond quickly.
Apologies. Yeah, so I think all the points... First of all, I don't think this is a third world area. You know, the emerging markets, the things that are developing here are so fast. And given the fact that you guys have a young population who are tech savvy, I think this is an area of the world that may not be seen by everyone, but it's emerging very quickly. And yes, I think it is the task of the regulators probably to protect the consumer and the users, because you don't want criminals or people to misuse that technology, and unfortunately that is happening probably on a day-by-day basis. And I think there was a session on cybersecurity. The banks and the regulators are doing a lot to protect that. And I think we need to educate the people more. Well, simple one, don't give away your PIN code to your friend, you know. But I'm pretty sure that with the new technology, there will always be more ways to protect your wealth, your payments, your individuals, your family. So I'm a lawyer, but I'm sure that the IT guys, you know, will solve this. But it's the regulators have to make sure that all these new fintech companies, that they have the basic set of secure environment, cybersecurity, and all these things. I hope that answers your question.
Thank you, Mr. Hank. Maybe perhaps Mr. Samar, but I think he gave you a doctorate because he gave you an honorary doctorate on the stage because of your points.
Shukran
so perhaps. Yes, Mr. Samar.
Yeah, thank you. The tone of the question was telling that you had been a central banker 20 years back, because the central bank have had that sort of approach. But now it's altogether different. And actually, as a matter of fact, the people from the third world countries, they would be the biggest beneficiary of this financial inclusion, I tell you. If they have got the security threats and problems, that does not mean that they should not work on that. Instead, they should leave this financial inclusion. So I don't agree with that. I'm sorry.
Thank you. I hope that answers your question, but I want to assume that you possibly disagree with the result of the fall, because it's like integration of sustainable development goals in developing digital finance get higher score than conducive regulatory and supervisory framework. So possibly you disagree with that.
Okay, I'm not disagreeing. I'm saying actually the governors need to reorganize their priorities to give or raise the priority of security for people and not include the non-bank customer before providing infrastructure, save them and protect them. And we need to reorganize those priorities to raise the security for people, privacy, protect their information, protect their money, rather than calling everyone to digitized products without the knowledge, without the awareness, financial awareness that will keep them awake for any threats or hacks. Thank you.
I think you bring in an important point. The minute you say digitization, it is the responsibility of the central banks to develop the different regulations and checks and methods that can minimize compromising the privacy, the security of the deposits in the institutions. We do that in the United States, as a matter of fact. And this year, every year we get to be, any bank in America gets to be examined, big or small. So this year we got 12 pages, we call it a request letter. And in the request letter, they have different departments, and we get 14 examiners to come into your office checking on you. The IT section only occupied 5 pages. Almost 40% of the questions were on IT. And you don't know how rigorous that is. And why don't we just copy what the United States is doing? It's available. It's ready for you. So.
But he brings up a very important point, and I think data protection, the data which is available in the bank, which is your data, your family data, my data, that can be shared to the benefit of the users, but the mindset of the banks that I speak to is that it's their data. No, it is your data, and you should be the only one to allow other people to use that data, and therefore I think there should be an education happening, because otherwise people give away the data too easily, because for me the data is the future goal.
Thank you very much, Mr. Heng. I think that's the last question that we'll take. We sincerely appreciated all your comments, and we don't have much time. I would like to, first of all, assure you all the sessions that we had from yesterday to today, the feedback that we have received from the participants, the speakers, the panelists, will be consolidated and integrated into the IFSB's work plan. We appreciated your comments, your feedback, your suggestions. We take them very seriously, And it is indeed a great honor and pleasure for us to be here with all of you as our first physical event in 2 years. And we are once again, I will use the opportunity before we get up the stage to once again thank His Excellency Dr. Fahd Al-Dosari, the Deputy Governor of Saudi Central Bank, International Relations Affairs Department. We are really grateful, Your Excellency. You made all this excellent arrangement possible for us. We thank you, and you and your team, the entire team from SUMMIT. I take this opportunity to say thank you most sincerely, and we are really delighted to continue to work with you as always. And we hope that, Bismillah Ta'ala, this will be beneficial to the global Islamic financial service industry, and all the feedback that we get from the industry, the participants, particularly in this summit, will be articulated and integrated into the future development of Islamic finance. On that note, I would like to once again thank you all for your participation, for your patience, and for the turnout in this summit. It was really successful, and it was really great. We can now give a big round of applause for ending this session now. Thank you. Thank you, Your Excellencies.
شكرا جزيلا لرئيس الجلسة والمتحدثين. Thank you indeed, our valued speakers.
Now we'll start the final session of the 15th session of the IFSB of 2021. This keynote speech is to be delivered by His Excellency Dr. Fahd Al-Dosari, Deputy Governor of the SAMA of the Central Bank of Saudi Arabia. Please welcome her onto the stage. Hello everyone, peace be upon you. Shukran.
MashaAllah, very efficient, very efficient. I didn't expect it to be this timely, so I do appreciate your discussion, especially in a very important and relevant topic, ESG and financial inclusion. I think you wrap it up and discussed it well. Since this is the final session and this is the concluding remarks, I'll try my best to be as brief as I could. I have around 5 pages, but I'm not going to go through them all. I know many of you, inshallah, will go to Mecca to perform Umrah, so Umrah مقبولة إن شاء الله من الجميع. والله يجمعنا وإياكم إن شاء الله على خير. We have now come to the end of this summit. It's been very busy 3 days. Many ideas, policy considerations, valuable insights for panelists, speakers, and many comments that we received. I am sure that we're going to spend the next few days, weeks, months thinking about many discussions that we had today. And it's good that Dr. Bello promised us that IFSB will take into consideration all these discussions, and I think this is the very important outcome of these summits. We share experiences, we share knowledge, and at the end we inshallah going to have policy changes and also implementations in the future. Our financial relations, economic realities generally being transformed, and that's why the topic of this summit was focusing more on innovation in many aspects. Innovation is not something that is coming in the future. We actually live in it, and we've seen last year, mashallah, during the pandemic, how the pandemic actually accelerated the implementation and the adoption of the innovation and technology in general. The one element of this summit is balancing resilience, and during our discussion we recognized that wave of digitalization has many positives, and we heard today and yesterday and the pre-summit all these discussion to address the financial and economic issues that all jurisdictions face. And we heard similar discussion that many of us face in many jurisdictions during the summit. Just earlier, we talked about unbanked and financial inclusion, and this is very important element, especially also for SMEs as well. At the same time, new innovation present new risks, and this is very important as well for us to discuss, and we had many points that I'm sure that we are going to take into consideration, and there are different maturities on how we deal with risk. However, with sharing these experiences will help us, inshallah, develop more policy response in that sense. Sandbox, regulatory sandbox, is a prominent example of how regulators have introduced new financial intermediation models into their markets. Sandbox has helped us in understanding and underlying risk, ensuring regulatory frameworks that commonly developed. Technology has a leading role to play in our supervisory mandates through the advent of RegTech and SupTech platform. I think I speak for everyone when I say it is an exciting time for Islamic finance industry globally. We have witnessed complex challenges during the COVID-19 pandemic. This has also accelerated, as I mentioned, the digitalization in the Islamic finance. Islamic finance growth up to today has been extraordinary. The industry is almost $3 trillion US dollar in asset globally. This is envisaged to grow over, inshallah, the coming years as the sector flourishes more and more in many jurisdictions. I'll try to conclude now by expressing my heartfelt thanks, gratitude, appreciation for being part of the 15th IFSB Summit here in Jeddah in Saudi Arabia. It has been our pleasure to host you all, and I sincerely hope that you have had a warm welcome, a comfortable stay, and an enlightening few days of discussions. I hope, inshallah, that we will continue to meet in such forums and continue sharing our experiences. Let me also express my deep appreciation to our esteemed speakers and panelists over the past 3 days. Also, I am very grateful for Dr. Bello, the Secretary General of the IFSB, and also the IFSB Secretariat team for their incredible efforts in organizing this event. I express my thanks to our colleagues as well in SAMA who have collaborated and worked tirelessly alongside the IFSB and jointly holding this summit here in the Kingdom. I especially thank all of you for attending this year's summit, whether physically or virtually. And mashallah, the number of attendees, we reach almost 400, which is a very good number. I'm really glad to see a majority of you here in person, especially after in the past year and a half with the virtual world. So it's really good to see all of you in this event. And if I may also take this opportunity to thank our organizers as well. This wouldn't happen without the help of all of them. Let's give them. And if you allow me just a few seconds, I'll speak in Arabic just quickly, and I promise I'll translate it later.
I'd like to express my appreciation and gratitude for you all for your great efforts. It is such a highly organized summit. We have been off these kind of in-person or physical conferences, but thank you ever such for your great efforts that you have made it possible successfully. We have showed to everyone how much we have come, how much we have been successful, and your own commitment. And we are very happy to see our own sons and daughters organizing such a great events and summit. And we hope to get rid of this of pandemic. And we see upcoming events and summits. Thank you so much. Your attention, I appreciate it. Thank you.
I'm really proud of our I'm not that old, but I'll just say it. Our daughters and sons that really helped us. They really look after us in the past few days, and they really were there for us. And many thanks with them. Really proud of the achievement, and inshallah, we are looking forward to welcome you all the time to Jeddah and to Saudi Arabia, inshallah. Shukran, shukran jazila. Salam. شكرا يعطيك العافية.
شكرا جزيلا سعادة الدكتور فهد الدوسري. أصحاب السعادة، حضورنا الكرام، بنهاية هذه الجلسة.
At the end of this, we come to this end of the 15th summit of the IFSD hosted by the Saudi Central Bank. Would like to express our appreciation and gratitude for the IFSB and the member countries, and also I'd like to express my appreciation and gratitude, ladies and gentlemen, for all the people who contributed to the success of this summit. Thank you ever so much. Your attention is highly appreciated. Thank you ever so much again and again. Thank you.